We think we're live.
Hopefully we're live. Yeah.
We think we're live right now. And if not, then there's
Oh, yeah.
something going on with the streaming software, but we should
I
be
see you
live.
on your channel. I don't
I
know if
think
we're
it's
live on
taking a
my
little bit.
channel.
Yeah, I think it's taking a little bit longer than expected. Um, I don't know why, but thank God this doesn't happen when we do the market open.
Yeah. It's so weird.
Yeah, okay. It seems like we're live now on both channels, or
On
not?
both channels? Are we on live on mine? I don't see my channel up.
Because I'm seeing here in the stats that we have viewers coming in.
All right, all right, all right.
So if you are joining us from YouTube, let us know in the chat, thumbs up, or just write Meta versus Microsoft or whatever you want, just so we know that you are not a bot. It's like a
All
CAPTCHA
right.
test.
So are we live?
I think we are live.
All right. Yeah, I think we're live too. I have to just make some changes on our things. It
Yeah,
seems
I
this
think we
is
are live.
yeah, we're live. All right. We can't say any dark secrets anymore.
Okay, wonderful. We are live for the Meta Microsoft Qualcomm ARM Applied Digital Robinhood earnings report and call. But are you staying for the call this time or do you have to go? I forgot what you said.
I have to go again,
Huh.
you know.
But you're only going for an hour, so probably I'm still going to be here. So
All right. If I
you
come back, I
can,
come back.
yeah, you can come back. Don't click on end stream when you leave though, because that would be funny if we go offline before.
Okay, sounds good.
All right. So the markets. We can talk a little bit about the markets, I think.
We can talk. Man, I think so. Let me
We
just. I'm
have
just.
no rate cuts. We have no rate cuts for right now. There is a divided Fed that holds key interest rates steady. So we have no rate cuts at the moment. And it does seem like, and let me just pull this up. Voila. Markets did turn red when the decision was made. So we're now red across the board here. Europe ended the day mixed. Asian markets also mixed, and euro dollar 1.14. So getting a little bit better at the moment. So rates unchanged. It seems like they don't even know what they're going to do for September at the moment. I feel like Couch Potato has a sleeper build. You never know. So let's actually have a look here at Walter Bloomberg's updates. So traders price in less than 50% chance of September rate cuts. That's very surprising. Powell said we're monitoring slacker data quality in the CPI. Really hard to say if data to be clear by next weekend. Quite interesting comments there. We had a nice visit with the president, honored to host him. It was a good visit. Was very good for the memes as well, that's for sure. Powell said they don't see fiscal bill as particularly stimulative. Tariff and inflation process will be slower than expected. Still quite early days to see tariff impacts on prices. So basically, they're not moving because they're not sure. That's basically it. They're not moving because they're not sure. For some reason, I am only seeing comments from your channel, not my channel. So is there again a
Are
problem?
you not? Let me check. Let me check in your thing. No, you're live right now. I see you live.
No, I am live.
Yeah,
Can
and I'm seeing
someone?
chat here. You're getting. Yeah, I am only seeing chat from mine, as well. But we are getting from you. If anything, Neil, I just go to your stream and like pop out the chat, and then like that we can maybe not pull it up, but you'll still be able to see if there's any questions you want to take.
Yeah, indeed. I got the new kit. Got in yesterday morning, actually, fresh from the press, or fresh from Chelsea, actually. So yeah, if there are some questions from my chat, just let me know if you can see them, because for some strange reason we are getting screwed over right now. So yeah, this is basically the state of the market. We have Nvidia actually up almost 2% still.
Oh, really?
Broadcom still up 1.56%. Apple down, Meta down, Microsoft, Google down flat-ish. AMD is still up a little bit. Qualcomm is down going into this earnings report. All in all, let's see what we've got here. Novo Nordisk.
I know CoreWeave took a huge hit today.
Yep. We're going to check that out. Yeah, we're going to check that out real quick. Novo Nordisk down another 7.8%. SoFi recovering, now only down 3%. They were down 8% this morning. PayPal under $70 yet again. Our YOLO Applied Digital also taking a hit right now. It was flat to green before we got the Fed's decision.
Neil, I'm just going to be looking at your chat real quick. You did get a super chat on your end from Abi. We can't pull it up, but buy Meta, Microsoft Grab, or Applied Digital before earnings.
Ooh, that's a good one.
Is Grab also reporting today? I know that's become a popular one.
Is it reporting today? Good question. I don't know. Let's see. But I don't know. I mean, Meta, you can maybe predict that if they increase CAPEX by a lot, the stock will just drop based on that, unless the explanation
I'm hoping
is
that happens.
Yeah.
And you know, it's so weird. I feel like if Meta increases capital expenditure by a lot, you're going to see a maybe some negative sentiments there. And I feel like if Microsoft decreases CAPEX, which is the opposite Meta could do, I think Microsoft could take a dip too. So it's like it's such a weird market where any answer can give you a price dip right now. And yeah, Grab is reporting today as well.
Yeah, indeed. I mean, so many companies on the same day. Like, well, what is this? But yeah, to answer the question, I mean, Applied Digital could get a huge pump, but then again, there has to be a catalyst in the core that would make this thing move, right? Maybe they say, oh, suddenly we have like a new contract or something like that, because other than that, it's not like the business itself is going to explode this quarter. So yeah, I would still say, I think Meta still. Matt here saying he was at the final. I'm checking on my phone the chat. It's very strange that I can't pull it up. Did it work last time when you just refreshed your page?
I don't know, Neil, but I don't know if it'll kick us out. But you can try it. Maybe just double open the screen.
Yeah, let me try to like enter restream on another tab.
Yeah, before you kick us all out, Neil.
Mm-hmm.
Yeah.
Indeed.
We get Eddie here. Am I the only one that likes suck spending like a madman? Like he sees the opportunity, of course, he's gonna bet the farm. Eddie, I want to say I agree with you. I actually like him spending right now. I mean, we keep hearing the AI story is super strong. I see that. I mean, I think Neil can also see the bullish sentiments there. And I just think maybe Wall Street doesn't, though. I think Wall Street's going to be like, oh, you failed with your Llama 4 behemoth, and now this is just a way to get out. But I think it's just we're such in early stages that it's actually good to switch around if you feel like you need to turn things around. Right now is the pace. You can't be waiting still and idle like Apple.
I agree. I think Zuck is doing what it should be doing. Yeah, Robinhood is also reporting after hours. Yeah, so it does. If I open the new tab, nothing changes.
No, nothing? That's weird.
Yeah, that is indeed very strange.
What do you pay all these big bucks for?
Yeah, for real.
Um,
So let me just open a YouTube studio and just check the chat there. Let's see.
And Neil, we have a question here from Randall. Will Trump's new 50% copper tariffs increase cost of building data centers in United States? Um, I would say potentially so, but I wouldn't think of it. I have to look more into it, Randall. I would just say I don't think copper is a massive cost of the total data center build out, right? It's kind of more the AI, the chips themselves, and some of the other products. So if it does increase, it wouldn't be as bad as maybe a semiconductor AI chip tariff, for example. So I think if there is an increase, it's going to be marginal, and the data center players wouldn't see it too much, but it could impact maybe those companies that are doing the building of it, and maybe those are more a marginal business.
Yeah, we also have ARM reports, Transmedics reports. I mean, Jesus, everyone is reporting today. What the heck is this?
Yeah, right. No one, either everybody wants to do. If you have bad news, I think today's the day, especially if you're not Meta or Microsoft. If you're not the three, like some of the big players, if you have bad news, you have to put earnings today, because it's going to be overshadowed.
Yeah, so CoreWeave has been taking a hit more recently. And it's
What
interesting
is the other
because
one doing?
Course,
Yeah, that's what I was going to be
not
curious.
much.
Yeah.
Still holding on those technicals here. So,
I wonder if you divide it by that, what was it, 12.325, if it, let me do the math. What is it, 12? What was the other one, Neil? 12 point,
Course,
uh-huh,
12.9.
12.9 divided by 0.1235, I think was around. It gives you now, it seems like stock, those prices are kind of matching now. I think if it was 0.1235 shares, which kind of sounds around right, it would give CoreWeave a price of about $104. So now it seems like these two are moving pretty similar. Now even cheaper. Now it's actually might even be cheaper to buy CoreWeave than it is Cores.
Any plans, any price targets for you to be adding back to CoreWeave?
I don't know, Neil. I right now I was kind of looking at the when there's stocks like these that I feel highly volatile, I don't mind selling puts, Neil. So I was looking, it was like the 85. So at 85, I wouldn't mind buying it, and the 85 puts still gave you like a $5 premium or something like that. So the market is definitely expecting this to move like crazy during earnings, because I think earnings are in less than 19 days. So for me, if I want to enter back in CoreWeave, I think I would prefer selling a put where I could get that premium. If not, I just win that premium, because it's a very good premium and you can get it at a lot cheaper price. So that's how I've been thinking about it. Maybe I might decide tonight.
Fair enough. We have here Roberto saying, good news is he started to dollar cost average back in. The bad news is it's probably marking the local top.
Yeah, that's probably true. But hey, it's okay.
It's better than nothing. It's better than nothing.
Yeah.
Let's see. What other stocks? Let's see what ARM is doing. ARM is really killing it. So ARM 163. Qualcomm, I wonder what will make Qualcomm move today.
Yeah. I don't know. This one's it's a quiet bug until the market remembers, it's something cool, and then they forget about it, and it goes back down. Like I think in 2004, when we kind of see a nice pump of this one going up to 200, it's like local AI is the next big thing, and Qualcomm was going to be that super leader in local AI. And then it's like, you know what, local AI might take a little longer to really see some growth. Maybe we got to give it back to. So eventually we're going to hear that story again. Local AI, that's the next big thing here. Running your AI models on your phone, on whatever, and you're going to start to see a pump on that.
Yeah, could be. Transmedics reports. It seems that this one also had a pullback, closed that gap right here, actually quite perfectly. I see this one lost sound. Did we lose sound? Someone said we lost sound. Maybe it's just
I
trolling.
can hear you just fine, unfortunately.
Yeah. let me check. Lost sound. Or maybe he's just at the start of the stream. Test. No, okay, we have sound. We
If
have
y'all
sound.
could see the future, would y'all be rich stock wise? I would think so. I mean,
I hope
if
so.
you can see the future and you can't be rich in the stock, I don't know.
I hope so. So yeah, Transmedics as well. Applied. It's an
I saw
interesting
someone
one. This one.
asking. Oh yeah, what's this? Applied Digital.
Yeah.
We have
Okay,
to have a
sound is
list
fine.
of which ones we're gonna look through, because everything is gonna be wild today.
I mean, we have until the earnings call starts. We have like an hour, so
Yeah.
we can go through the first 10, 15 minutes. Everyone reports and releases like 5 minutes after 10, 15, sometimes even 30 minutes after the bell. So I think we'll have time. Yeah, so let's see what happens with all of this stuff, because we do have quite a lot of companies reporting. It's going to be very, very interesting. Waldo, I have 201 shares of Nvidia. Waldo, you're rich, you don't count. Waldo, that's a decent amount. That is a decent amount.
If I could see the future, my carry loss forward wouldn't be existent. Pretty impressive, Nvidia. The only thing I saw, we got that price target hike. Did I miss
Yeah,
anything?
but other than
Else?
that, no. I mean, not that I know of. AMD also got their price targets raised, but that's about it. Palantir is also up 1.4%, so we're now at $374 billion in market cap. But other than that, Micron is up surprisingly 2.26%. So either we missed something or it's just nature healing.
Yeah. I did see a question come in there, Neil. Like, what do we think is the best AI agent, I guess, right now in the market? You're still just using Gemini, right, Neil?
Yeah, because I am like Google integrated. So
Yeah. You know, I didn't think I would say this. I did not think I would say this. Grok
but
4 is killing it. Grok 4 is killing it 100%. It's, but I use it on, I don't know if I have to improve my prompting with the actual Grok, but in Grok using Perplexity, Grok 4 Perplexity is crazy. It's probably one of my top models right now.
what do you
Gemini
use
and
it for?
OpenAI, searching web search and getting like information that came out like 12 hours ago or 24 hours. If I'm looking like, hey, what came out from NVIDIA's this past 24 hours, all the other players can give me kind of good solutions, but the one I like the most right now is Grok for something like that.
So what came out from Nvidia over the past 12 hours? Let's see.
But I use it again on Perplexity. If you have you have the Perplexity Pro. Yeah, I forgot you're friends with the Perplexity CEO and stuff like that.
Let's see what we got here. I completely forgot that Perplexity Pro gets you all of the models of your choice.
Yeah. The only thing they don't have Grok 4 Pro or whatever, super intelligent. I
Yeah,
forget.
Super Grok or whatever it's called. Yeah.
If they get Super Grok, I think I might get the. I might also get the updated version of this. Martin, what's going on? Yes or no, Martin?
How long does this take?
You want steak? Yes, please.
Is it normal that it's taking so long?
Yeah, I mean it's doing thinking. Come on, you're Gemini does it really good. Gemini has some quick inference.
Yeah, but this is
Martin,
like...
you said yes or no. I'm looking at Martin. Is there actually a reason why AMD and NVIDIA have risen to these new levels? Didn't see anything. Should I get into NVIDIA before earnings tonight? Martin, I thought you were. Did you sell out of Nvidia?
Martin selling out of Nvidia, but he's the Nvidia guy here. After
Got
you,
900,000 euros. Jose, yes or no? I mean, I'm not. I know Martin bought a house. He bought a house for his daughter. He bought a house for the whole family. I'm not buying. I have plenty of Nvidia, and I don't plan on selling, and I don't need to buy right now. But yeah, did it give you anything, Neil?
no, I think
Short perplexity, long Google.
I think he got stuck. Lucky. Short XAI, you mean? Long Google for sure. Long Google for sure. I mean, I know it's thinking, but it's not like I asked it a research or something. I just asked it for search.
Yeah.
Fast answers to everyday questions. I don't know. That's strange. But okay. It's not like we don't know what happened with NVIDIA. Just go on Jose's channel and he gets you all of the answers.
All of the answers. Boom, boom, boom.
But yeah,
hey,
Grok
yeah,
4,
look.
I mean, Grok 4 came out the latest. So I guess everyone else can come out with a newer model pretty soon and it'd be like, oh, now we are on top. And it's like,
yeah. I mean, we have GPT-5 expected in August. I'm hoping. Maureen, Jose's reason being is August 1st tariff. Got it.
August 1st.
I mean, obviously, I don't know how taxes are where you're at, Maureen, because I think you are somewhere overseas.
Maybe Germany?
I forget. But that also does play like a big role for something like me. Like even, I forget what it is, like 15% on long-term gains, but that's still a lot that I would have to pay on taxes that I wouldn't want to I wouldn't want to pay right now.
Roberto saying, Couch, you don't pay 200. No, I don't pay 200. I got it for free.
For Perplexity, I don't pay either. But if they get Grok Super, I might.
Leon saying, I pulled out of the market completely prior to the July tariff deadline, so I'm sitting on all cash. What would be your first buy to get back in? Oof. I mean, well, what is Google trading at? Are we at 200?
That's what I was going to say. I think my first if I had to get my toes back into the market, I think it would be like a Google.
Yeah, Google 196, doing well.
Yeah,
doing well. I mean, you can play it safe, right? You can go with the Googles. I mean, I will just tell you my favorites, like Google, PayPal.
SoFi.
SoFi has recovered very well today. Seems like the market didn't cry. Yeah, it's now only down 2.2.
Oh, never mind. I thought it was.
I mean, it was down 8%.
Yeah. Oh, okay. Yeah.
So it's now 2.2. We also got plenty of analyst price target upgrades for SoFi, which is a first because like analysts got the message and retail started to cry. It's like the exact opposite. But yeah, Meta. I hope Meta drops after hours. D-Local is a good one. United Health is a safe bet, I'd say. If you like it, I don't know. Not everybody likes it, so.
Hey, market is closed. Come on, Neo.
It's because of Perplexity. Screw that.
Come on, Neo. Jeez. Amateur hour continues here.
But yeah, this is how the market closed today. So that's why I was looking at my portfolio and I wasn't seeing any ticker changes. I was like, oh, very strange. Everything's flatlining here. But yeah, NVIDIA was up 2.14%. Yeah, nothing much has changed since the last 10
since the last time we looked at it in like 2 minutes ago.
Yeah,
before
exactly.
the market closed.
What do we have here? HIMS up 8.7%, Marvell 7%, Oklo, this company just goes nuclear. $11 billion in market cap with zero revenue. Both of us generate more revenue than Oklo, but we're not worth $11 billion. Just
That's
saying.
Wild. Yeah.
Rocket Lab did recover a little bit. Reddit is up, Hood is up going into these earnings, and Nvidia up. Whoever is down the most, still Novo Nordisk, closed at $50. Then PayPal, strange. SoFi, Apple down a little bit. Intel down a tiny bit, so is New Holdings. I do wonder if Novo, let's see. Applied Digital was at $10. Novo, let's see if it, yeah, it seems like it's getting quite close to that bottom right here. Definitely oversold right now at the moment.
All right. I think Qualcomm was the first to report earnings here. I see it from Wall Street Engine.
Okay, so
They
let's
beat, I don't know if you want to pull them up, Wall Street Engine. They share on
yeah,
Twitter.
I like them. I've been following
Yeah,
them
same.
actually since single digits followers.
Oh, wow. That's pretty good.
I know.
You're so cool.
I know.
Knew the cool
Thank you.
guys before they were cool. Trendsetter here.
Should have invested. So, Qualcomm, revenue beat, EPS beat as well. Revenue's up 10%. So yeah, it's not a fast grower, but 10% growth, and EPS growing 19%.
Yeah.
Guidance seems to be, I'd say, in line. Guidance in line for revenue and EPS non-GAAP as well.
Yeah.
So
I
yeah,
mean,
it's
you see that revenue grow 10%, but you see that earnings per share grow. I would like to see the commentary in a bit, Neil, but
yeah,
something like
I'll
this, right?
open.
You see when inventory issues start to get away, you might not see much revenue growth, but you still have better pricing powers and better margins. So you tend to see better earnings per share grow a lot faster than revenue. And maybe that's what's happening here. I know a lot of their products are still kind of like in the handset, as we see 6.3 out of the almost 9 billion, so more than 66% of revenue came from that segment. So maybe that that market is turning a little bit around, and that could be seen as a nice bullish case there for Qualcomm.
I'll pull up the earnings presentation real quick, and then apparently Microsoft reported. By the way, guys, whoever gets
Yeah,
the numbers can
Microsoft.
put it in the chat.
I see here Microsoft up 5%, it seems, after hours. Real quick, let me just see Microsoft stock. Yeah, 6% right now. This one's giving the big middle finger.
To who?
Shorts.
Thought maybe to us.
No. It's the earnings per share of $3.65, beating expectations by almost 30 cents. Revenue of 76.4 billion, beating revenue expectations by almost $3 billion. I would like to see kind of Azure growth, Microsoft investors relations. And I would love to see any CAPEX update.
I think that's for the call, for sure.
Is that for the call?
Yeah, because guidance is for the call. We don't get anything here. So Microsoft, this is it, I think. Yes, it is. That's crazy. Revenue up 18% for a company like this.
That's wild, right?
76.4 billion. Operating income up 23%. Net income up 24%. And then diluted earnings per share up 24% as well. Let's see the Microsoft here.
Azure surpassed $75 billion in revenue for the year.
For the year, okay. So Intelligent Cloud, $29.9 billion, increased 26%. Server products and cloud services revenue increased 27%, driven by Azure and other cloud services revenue growth of 39%. So incredible. Incredible results for that. Let's see if we got some comments here. So yeah, cloud and AI is a driving force of business transformation across every industry and sector. We're innovating across the tech stack to help customer adapt and grow in this new era. And this year, Azure surpassed $75 billion in revenue, up 34%, driven by growth across all workloads. So yeah, I mean, amazing.
Yeah, Meta also reported they're up 6% as well.
Very nice.
So just open up the market, and that's it. Thank you.
open the door.
Yeah, that's wild. Microsoft and Meta, $2 trillion companies, up 6%. Just these two companies will be adding a few
Wow.
100 billion
Meta,
when you add together on market growth.
Man, Meta, I mean, didn't just beat Meta EPS $7.14. That's the expectations were $5.87.
That's why Mark can pay those big bucks to those engineers.
Mark can do whatever he wants. Let me pull up the press release for Meta. Yeah, Zuck is goated. Zuck is goated for sure. Here it is. I was like, I keep clicking on the same link and it doesn't give me anything. But no, I just had to.
Meta investor.
I'm
going to try. Obviously, he does share numbers already in capital expenditure. Once we get that paper.
This is the paper. So, okay. Total expenses for the full year, $114 to $118 billion, narrowed from their previous 113 to 118. Okay, big deal. We currently expect 2025 CAPEX, including principal payments on finance leases, to be in the range of $66 to $72 billion, also narrowed down from the 64 to 72 billion, and up approximately $30 billion a year over year at the midpoint. So not much has changed here, other than
they just
the midpoint
increased
changing
the bottom low.
Yeah. Okay, interesting. We see here family daily active people.
The other thing, though, sorry, Neil, staying there with the CAPEX, he in the next sentence, he says, we currently expect another year of similar significant capital expenditure dollar growth in 2026 as we continue aggressively pursuing opportunities to bring additional capacity online. So it seems you're going to see another strong growth, even though we're still mid 2025. You're expected to see another strong growth in 2026, which can be bullish for a lot of our semiconductor plays right now. Yeah, AMD up about 0.5%. NVIDIA's up about 0.6%, hitting $180. Nice.
Intel is down 0.6%.
Semiconductor stocks that matter, Neil.
Oh my God.
I wonder how Arista Networks. I know this one provides 1%. Kind of like 1.7.
Lam Research is up 5% as well.
Yeah.
They reported.
Not bullish enough.
Yeah, they reported as well. I mean, they're back to 100 bucks, 104. What does that mean for the rest? Yeah, Applied Materials is up 1%. What about Applied Digital? Up 5.4%. Oh, we're eating good tonight. We are eating good tonight. CAPEX isn't that great for NVIDIA. I mean, I think it is. I think the fact that they said that the dollar amount next year is expected to increase also $30 billion. I mean, I think the majority of that $30 billion, I mean, part of the $30 billion that goes to GPUs will still go to an NVIDIA, although some people will try to convince you that it's still exclusively to AMD. No, that's not true. That's not true.
I mean, they have partnerships, so AMD will definitely get some there.
Yeah, of course.
Yeah, but like you mentioned, it's not that exclusivity that there's some people discussing.
What is CAPEX? Capital expenditures, basically what the company thinks it will have to spend to invest in the business, whether it's infrastructure, in this case, definitely infrastructure, build-outs of data centers and all of that.
Yeah, so improvement. So for a company, it's usually what the company can kind of use to build its overall business in forms of equipment, materials, retail space. For a company like Meta Platform, a company like Microsoft, it tends to be more on data center So you would say that, hey, if they're increasing their capital expenditure, their capex, it means that they're going to be building more data centers, which in theory means they're going to be buying more chips, more networking solutions. They're going to need more power infrastructure. So it kind of gives us that excitement. People are complaining we don't have too much energy with these great earnings. I mean, yay, green.
More money, more money. No, but yeah, it is. I mean, those are great, great. I mean, it's quite crazy when you look at going back to the actual numbers for Meta. 3.48 billion family daily active people, up 6%. For some reason, they still find more and more people to use their services. Revenue
It's wild.
up 22%. That's crazy. Let's see if I can find the because the presentation is usually better and you see
So
second
I'm
quarter,
just
not
gonna,
first quarter.
while you're looking at that, Neil, just take a closer look if there's anything really that we haven't looked at right now that might be doing good.
Robinhood reported.
They're up about 3%.
Yeah, Robinhood reported EPS 42 cents, beating expectations of 34 cents, revenue just over $1 billion. The market was expecting 989 million. Let's see if I can pull that one up. By the way, if you have CNBC and there is an analyst already speaking some whatever, you can pull it up.
Let me sign in real quick.
Yeah, so Meta making new all-time highs. So we thought we could be getting Meta for cheap, but seems like we are not getting that at all. At all. Qualcomm, is Qualcomm moving? Yeah, on the downside.
No, really?
Yeah, Qualcomm is moving on the downside. This is one that I wanted to pull up just to see the different segments clear. Let's see. Available. I know it's available, so give it to me. Here. Okay. No. I've clicked 3 times on the link and 3 times they tell me no, I have to go somewhere else. Like, hello, you deserve to be down.
Wait, that's Qualcomm?
Yeah. I'm like, it's not that difficult to give me what I want. Give me what you want, what you really, really want. La 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 la. Ah, voila, I got it, I think.
Yo, Meta's ripping it.
Man, I'm telling you, Zuck is the GOAT.
10%, 9.9 right now.
Okay, so this is basically
and
Qualcomm.
Microsoft 7. That's wild.
This is basically Qualcomm right now. Where are the segments? Okay, so here it is. Automotive did increase 21%. IoT 24%.
That was still growing. Nice.
Yeah. Okay, so that's good because they did talk previously about the industrial AI and all of that. So I guess they're still seeing some momentum in those segments. Qualcomm, Xiaomi, Galaxy Z Fold. Okay. And then yeah, this is probably the next big thing for them. The smart glasses.
Yeah, it's crazy that automotive market is. It was that did I see correctly? Neil, that was quarterly basis of almost $1 billion per quarter now, or was that 12 months? Or am I just blind? I'm probably all three, but
automotive no for Q3 984.
Yeah,
984 up 21% year over year. So yeah, no, it's getting quite interesting.
Yeah. How's ARM doing? ARM is also reporting. And Martin here is coming in. I mean, Martin's a little ARM.
Oh, ARM is down. Yes,
down. Yeah.
People think I'm short or something on ARM. I'm not short on ARM or anything. It's just that I can't understand how it's
Nvidia
worth 173 billion. But yeah, what did they? Let's see what ARM reported. So ARM EPS in line, 35 cents. Revenue a small miss, It missed by 1%. I'm sorry. I don't understand. I'm sorry to say, like ARM, $173 billion, and you're generating just $1 billion in revenue.
Yeah.
I don't get it. I really don't get it. And then you have like a Qualcomm who's growing and who's generating quite a lot of revenue and profits, doesn't get the same love. It's I don't know. To me, it doesn't make much sense. Qualcomm is worth Qualcomm is down 5%, and they're worth less than ARM.
That's wild.
Yeah, I don't know.
Because I think if you tell me who has the bigger potential, I would say Qualcomm. Because at the end of the day, ARM is just it's typically a licensing play. And the licensing play, you're only limited to how much growth. With a actual true player in the consumer space, you can have high margins and you'll be able to benefit dramatically out of things.
Yeah, Amazon is up 2.3 because, well, why not, right? Because Meta and Microsoft are up. So probably AWS is going to be printing money this quarter as well.
That's the thing. Now, if Amazon turns around and says, look, we're actually not gaining that much in AWS, it's going to be like,
drops.
oh, Google and Google and Microsoft are taking your market.
Google is definitely taking market. Like, there's no doubt in my mind. No doubt in my mind. What did we Applied Digital? I wonder which one was that. I just want to see the numbers for Applied Digital, like if there are any numbers to look at.
Martin's asking why is ARM down. ARM's down. I think Neil mentioned revenue was in line, but earnings per share was a miss.
Earnings per share in line, revenue missed by 1%, plus the stock is extremely expensive. So,
and Neil hates it. 4 reasons right there.
I don't. It's an incredible company, very important.
Neil hates it.
Don't understand why this one gets such a high premium.
Yeah,
like you would think they would be growing triple digits.
Yeah,
but no, they are not.
ARM is like a roller coaster last week, and then improvement. Right here. Let's see. Improvement. Seems like improvement. I just want to give some talks to improvement. He seems like he's starting out. He's a college kid, I think mentioned. Starting with 6K. I mean, I wouldn't say as a college student starting with that much. I think that's pretty impressive. If you work and you just invest, you can easily make it to a few hundred in just a few. And patience and discipline in constant dollar cost averaging goes a very, very long way. It can be the reason you are a millionaire in a lot earlier than most people.
Yeah, I mean, with 6K, you don't have to overdo it. Like, don't stretch yourself. Yeah. Don't put 10 positions or something. Love the collaboration between Jose and Bruno Fernandez. Yeah, so this is ARM. This is ARM's quarter. Revenue up 12%. I'm sorry, but 12%? Really? Gross profit up 13%? Net income down 42%? Is this the is this the $170 billion company that gets like 1,000 times sales multiple?
It's because everybody's saying, wait a minute, those royalties and licensing fees are going to eventually hit for all those data center CPUs, but we just can't see it.
No, but you agree with me that there is something strange going on here.
Oh, yes, no? yes. Oh, I was, my bad. I was being a little bit, what's the word? Man. Sorry, I was being sarcastic.
No, I know you're being sarcastic,
okay.
but we agree that something doesn't make any sense here, because they should be printing money.
Yeah, definitely. They should be. So I wonder what's going on here.
I wonder if they show us backlog here, because even last quarter backlog wasn't even increasing. Let's see. Licensing revenue was slightly down relative to a strong. Okay, given the normal fluctuation in timing and size of license agreement, contribution from backlog. Okay, nothing changed. Okay, so I have to wait until the presentation comes out, because If I show you last quarter, and by the way, this is already fiscal year 26 for those wondering.
I wouldn't say same as Matthew. Matthew saying he was not expecting this at all. I was not either. I thought we were going to have not this green of a day, you know?
Of an after hours.
I mean, we've been in the market and I've seen videos where if you get excited too quickly, it can turn bad. So maybe that's why I'm controlling some of my excitement right now. I don't want to be the next clip getting excited about 10%. But yeah,
Okay, so
yeah, let's see here.
this is applied digital, not material, digital, or Eurobet with Roberto. So revenue 38 million, up 41%. Net loss 26, down 25%. Adjusted EBITDA of 1 million. Wow. Fiscal
Look at that
year.
revenue growth.
Fiscal year, yeah, revenue of just growing only 6%. So why is... Okay, so here they talk about their deal with CoreWeave. Since the end of the fourth quarter, CoreWeave exercised its option for an additional 150 megawatts, not mean weighted, which would bring the total capacity leased by CoreWeave to 400. So okay, so CoreWeave is paying them 7 billion and now an approximate extra 4 billion contracted revenue, which would bring total contracted revenue to approximately 11 billion,
11 billion
for
by
15 years.
That's
So
now like $800 million per year on average.
733.
I said on average. Thank you, Neil,
Yeah,
calculator.
no, I just calculated. 733 million per year.
And this is a market cap of...
This is interesting.
But the thing here, Neil, is like, it's one thing
2.2.
with Applied Digital, even though it's one of our yellow places, you can't build data centers that quickly, so you can't expect
Exactly, it's
revenue
not-
growth. Yeah, so it's like once you have it, and that's pretty much it. Now it's all about like how will you be able to improve your margins, so you're going to be able to find certain ways to look. I already got this revenue. Maybe now I lay off a few people. Maybe now I do a little bit of stuff here and there, and increase my margins from here. So I think that's what we have to see, unless they start announcing some massive other place.
Yeah, so they say here, with the first 100 megawatt facility scheduled to be operational in Q4 2025. Okay, so I guess that's when we're going to see some revenue grow faster than 6%. The second 150 megawatt facility scheduled to come online in mid-26. And then the third is planned for 2027. We believe Polaris Forge 1 will serve as a launchpad for the future of AI infrastructure. So I guess still on time compared to the last time we checked the announcement. But this is quite good news, I would say, and it makes sense why the stock is now up, I think 10%, 9% after hours. Because once these things do get built out, you can start
That's when the money
calculating.
starts flowing.
Yeah, exactly. You can start calculating those $733 million that will come
So getting
in.
it ahead. It seems like ahead of schedule. They mentioned a little bit.
No, I think it's still
but at least
it's still on schedule.
Yeah, and I would love to learn a little bit more about that Polaris Forge 1. Again, this is more for me, Neil, like we talked about, little YOLO-ish play. But at the same time, it's like you talk about it sometimes. You like to buy and invest later. I mean, buy and research later. And that Polaris Forge 1 in the launchpad for future AI infrastructure, I would love to learn a little bit more about that. And is this one of the reasons that maybe CoreWeave has really want to work with them with stuff like that?
Yeah, I mean, it does say here, combined with abundant low-cost energy in over 200 days of naturally occurring free cooling annually, management believes a 100 megawatt data center customer could save up to approximately $2.7 billion over a 30-year period, thanks, as compared to the current industry data center in the region. Our strategic decision in location and design are intended to position Applied Digital to grow dramatically in the Dakotas and across other regions within our pipeline. North and South Dakota are very nice places I've seen. I think I already said that the last time we talked about this, but I just want to reiterate in case maybe one day Airbnb or Booking wants to sponsor us.
Neil, can you believe with all this excitement in cloud growth and all this excitement about the AI market, would you believe Google is down right now?
I am not surprised. I am not surprised because, all of the news that we just talked about, of course, it hurts search, right? It's destroying the search monopoly. That's why. That's why it makes total sense.
It's sarcasm, Neil.
It's ridiculous. Well, what is this? I mean, I understand why Intel is down because it's Intel, but I also understand why PayPal is down because it's PayPal. But Google, quite strange, especially since Amazon is up like 2.7 and they didn't say anything. I wonder what the other ugly duckling is doing. Oof, thank God. Apple is down 0.5%. Oof. Okay, so we're good. Nature is healing. Nature is healing. And in the meantime,
what's going on?
Perplexity came out with their answer. A few hours later, Perplexity comes out with the answer. Executive stocks.
Nothing new. No, that's not new. That's not new.
No.
That's not new. Not new. Nothing here. Question, by the way, guys, do Meta and Microsoft raising their CAPEX, capital expenditure? We don't know about Microsoft. Meta kind of did their low end. Their low end was 64 back then. I think they increased their low end to 66. Yeah.
Any CNBC things that you found, or
I forgot. I was supposed to be looking at something like that, right?
You were supposed to. Yes, you were supposed to.
But I mean, I want to interact with people.
Well, we can interact while they watch an analyst talk about things he might not understand.
Let's see.
I saw Foxconn did something today. So iPhone maker Foxconn joins $1 trillion AI data center market with new alliance. They will take a 10% stake in Teco Electric Machinery. I don't know what that is. The two companies are teaming up to bring their expertise together to effectively create a one-stop shop for anyone looking to set up an AI data center. Okay. I guess everybody's looking to build data centers these days. Makes sense. Yeah, Robinhood. Let me maybe pull up because I'm curious about their. Bruno did last week. Remember when I said I was sick? I was actually having a medical at Chelsea, so that's why. That's why I didn't want to play with Højlund for another season. Let's see. Robinhood. Are you into an old Disney movie, by the way, Jose?
Am I into old Disney movies?
Yeah, like the classic ones.
I mean, Aladdin, Lion King. What's old to you? What's old to me?
Robin Hood.
Never seen that one.
Okay, stream is over, boys. You've never seen Robin Hood, the animated
Nope, never seen
movie?
it. Nope, never. I used to watch Lion King nonstop.
Yeah, okay. Who doesn't watch Lion King nonstop?
Toy Stories was great. Tarzan,
1, 2, 3.
goated.
1, 2, 3. Toy Story. Tarzan.
One.
Tarzan. What? No, 1. Yeah, 2 and 3 is also fine. But yeah, Tarzan is a very, very, very good movie. Let me actually check. Now, man, Robin Hood, you have to put it on your list. So it's a very good movie, funny one. What would I want to check on Robin Hood? Funded accounts continues to go up. The split, maybe. Yeah, okay, the split. So equities did increase nicely quarter over quarter. Options as well, up 100%, up 49% quarter over quarter. Not bad. Not bad at all here. this is nuts. Like the growth here with Robinhood assets under custody is crazy. They've been doing very, very well. Very, very well. Net deposits did drop quarter over quarter, but okay. Still up 25% year over year to $13.8 billion. All that's fine. Options contract traded. I think this is something new.
Neil, you want me to share? I got some stuff here for Meta and I think Microsoft. Let me know if you can hear the audio once I start sharing.
Yeah, just one last thing here.
All right.
Average revenue per user, okay, did go up quarter over quarter. Transaction-based revenue is coming down already 2 quarters in a row. That's interesting. I would have thought that this would have gone up, but okay, no, still pretty good. Still pretty good. So, okay, you go ahead.
Let me see if when it starts sharing, let me see if you can hear it.
Time to these results had been muted up to this point. How significant are these results then? Were people, you think, just expecting something more muted?
You know, everyone had written off the Mag 7, then they came back to the Mag 7, realizing that there were some winners on the AI side. Meta's ability to continue to grow users and to grow ad revenue is what's driving it, but it's also what's in the future. The ability to bring Instagram, the social networks, the monetization models of digital ads, and of course, what they want to do in the AR, VR piece is all headed in the next 12 months. And that's where the excitement is, because not just the glasses, but it's also the new automation in AI. Meta is the most efficient company in the Valley from an automation perspective. They're going to be so efficient that they're going to be able to afford the super intelligence employees and, of course, the investments in AI that they're making. It's not a surprise to the folks inside the Valley. It is a surprise if you're outside the Valley, because there's a lot of work they've done to get to exponential efficiency inside the organization.
Brent, we were just showing the narrower CAPEX guide from Meta. It's narrower, like on the bottom coming up. They're going to definitely spend more, it seems like. But do these moves and the overall results perhaps give a green light to the hyperscalers, to the mega caps, to keep spending on AI? And is that a read-through perhaps to the likes of NVIDIA that are likely to still mint money?
CAPEX is going higher. There's no way to put it. We're at the beginning of the cycle. We've said this, that the enterprise adoption of AI is tiny. Your company, my company, we're in our infancy. There's just a few people using these tools today. We're all using it in our personal life, but we're not using it in work. And that's only going to grow, and that's going to fuel the next leg of this over the next couple of years. So saw Google raise CAPEX by 10. We saw again, the high point raised up by another $2 billion for Meta. That's going higher. Microsoft, we anticipate, given the numbers and the blowout on Azure, that they're going to keep spending. And they said last quarter that they pushed out the capacity constraints. They thought they would have some opening at the end of this year. That's not happening. And so we expect spend to continue to go higher. And I think investors don't care, because right now you're seeing the revenue numbers, Meta accelerating revenue growth from the teens into the high teens, low 20s. Microsoft accelerating Azure from mid 30s to high 30s. And so these numbers are phenomenal. Yeah. And so it comes down to revenue growth. If you put it up with the margin and both put up great margins, that shows you can make money in the age of AI. And this isn't all the railroad analogy I've heard 1,000 times. We're laying the tracks. Where's the ROI? Where's the ROI? Well, guess what? These companies just put up massive margins. Yeah. They're making money at the beginning of the AI investment curve.
Yeah, to your point, the core businesses and the balance sheets are supporting these massive investments. Ray, I want to go back to Meta here for a moment, because not only did we see this narrowing of the range for CAPEX to 2025, and also these comments about 2026 year-over-year growth rate going to be higher than 2025 where CAPEX is concerned. But the Mark Zuckerberg superintelligence post earlier today, where he basically said that this is, at Meta, it's about bringing superintelligence to everyone. And this is the line that jumped out to me. He said, this is distinct from others in the industry who believe superintelligence should be directed centrally towards automating all valuable work, and then humanity will live on a dole of its output. Basically painting a difference, a differentiator between Meta and some of these other companies, like arguably Microsoft. How do you see it?
there is a divide in the valley between centralized scarcity, which is centralized control of AI, and decentralized abundance. Meta is on the decentralized abundance side. Apple's on the decentralized abundance side, which means we can take intelligence to the edges and give it to everyone. There's 100 billion parameters on an Apple device. There's 3 billion parameters on an Apple device. And you think about the number of devices that can actually deliver on super intelligence. That's what they're talking about. And that talent war that's coming right now is he's assembling a group of folks that actually believe that everybody should have access to AI, not a few. And it's going to be a very different model as we break it out 2 years out, 3 years out, and 5 years out. But when you take digital ads and we take Insta, Metaverse, and you bring the AI together, you get a brand new world of commerce and social media. And that's what he's also building with the next set of glasses and the next set of integrations. They are the most automated company in the Valley right now. And that's an important fact because they're getting to revenue per employee and profit per employee numbers that are going to blow everybody else out of the Valley away. It's a different model that they're building over there.
Yeah, and certainly the stock's reflecting it right now, up 9.5%. Brent, whether it's accelerating cloud numbers here with Microsoft, whether it is the beat from Alphabet last week, what does it say about the broader cloud ecosystem here and what we should expect from Amazon tomorrow?
Amazon should see acceleration. Their street's looking for 17% growth. They put up 20% backlog, which is a lead indicator of growth. So we would anticipate that 17 is safe, and hopefully they can put up a little more. They've been putting up really big margins, so I think everyone's hoping they fuel some of the big margin upside back into the investment, because I think most would vote that between Meta, Microsoft, and Amazon, that Amazon still has a little more to show in AI, a little more excitement in what's the next killer app that's going to drive. It can be compute, and everyone can keep driving compute to Amazon, but I think they have to show a little more excitement to investors to get them excited. The stock's really lagged. And, to Ray's point, like Microsoft, Meta is in every check is blowing away advertiser budgets, taking share from Google, taking share from Amazon. And so, the kind of to his research and what we find, I think there's an element too of like what's happening in the public cloud. It's clearly Microsoft's gaining share on Amazon. And how does Amazon stop that share gain that Microsoft is on right now?
Okay. Yeah, it's a far cry from.
So I guess he answered the whoa. Whew,
There we go.
Much better. I guess he answered the Google question. It seems like the market thinks that Meta is taking share from Google and the ad space. And maybe that's why Google is not participating after hours in the in the surge in stocks in share price. I mean, okay, we know that Zuck has been talking about the fact that AI will make everything more efficient inside the company, will also help with advertising, with targeting, with increasing the return on investment, which makes me question and say, why couldn't Alphabet do the exact same thing? Like, who says Alphabet isn't doing the exact same thing with their advertising system? Would be a given. So, yeah, I mean, Meta is definitely on fire right now across the board. Reality Labs still burning money, but okay, fine. If they do, did you watch the Zuck clip today that he posted?
I read the letter he submitted, but I didn't watch anything, Neil.
So let me, because this basically also explains why they're really pushing towards for those smart glasses. So let me just do this.
No sound.
No, you don't hear anything?
No.
Cool. Let's see.
When you share a screen, Neil, you have to make sure it's just the Chrome tab itself, because I don't think you can.
Usually it does work. So let's see. You didn't hear that?
Play
No.
it. Nope, I don't hear anything. I don't know if
don't
others can hear it, but not me.
I don't know. I can hear it, but then again, of course I can hear it. Let's see if I send it to you.
Yeah, send it to me.
In the
I'm
chat.
the video guy now.
Yeah, so it seems like my PC wants to boycott me today for this earnings stream. But yeah, he will talk about more personalized super intelligence basically for each and every one, which then you can tie it to the fact that they're working on those smart glasses. And so if the glasses can see and hear everything you see and hear, and it knows you, maybe they'd also like teased the bracelet or whatever, the haptic bracelet that they have. You could see Meta entering a stage where they become a pure, not a pure, but a hardware software company. Because if they manage to sell hundreds of millions of smart glasses, and that's connected to their Meta AI, could be a big deal. Okay, let's see if your sound works.
All right.
Everyone, I want to
It
talk
does.
about our new effort, Meta Superintelligence Labs, and our vision to build personal superintelligence for everyone. AI keeps accelerating, and over the past few months, we've begun to see glimpses of AI systems improving themselves. So developing superintelligence is now in sight. But there's this big open question about what we should direct superintelligence towards. A lot has been written about the scientific and economic advances that AI can bring, and I'm really optimistic about this. But I think an even more meaningful impact in our lives is going to come from everyone having a personal superintelligence that helps you achieve your goals, create what you want to see in the world, be a better friend, and grow to become the person that you aspire to be. This vision is different from others in the industry who want to direct AI at automating all of the valuable work. At Meta, we believe in putting the power of superintelligence in people's hands to direct it towards what they value in their own lives. Some of this will be about improving productivity, but a lot of it may be more personal in nature. This is going to be a new era in some ways, but in others, it's just a continuation of historical trends. About 200 years ago, 90% of people were farmers growing food to survive. Today, fewer than 2% grow all of our food. Advances in technology have freed much of humanity to focus less on subsistence and more on the pursuits that we choose. And at each step along the way, most people have decided to use their newfound productivity to spend more time on creativity, culture, relationships, and just enjoying life. And I expect superintelligence to accelerate this trend even more. The intersection of technology and culture is where Meta focuses, and this will only become more important over time. If trends continue, I expect that people will spend less time on productivity software and more time creating and connecting. I think that personal devices like glasses that can see what we see, hear what we hear, and interact with us throughout the day are going to become our main computing devices. I believe deeply in building personal superintelligence for everyone. And at Meta, we have the resources to build the massive infrastructure required and the ability to deliver new technology to billions of people. I'm excited to build this future, and we've got a lot more to come soon.
He did slip there, the Zuckbot. He did.
Yeah,
like,
he might be a little human there. Deep fake video. I did having that on full screen, Neil, and him looking right at me kind of scared me a little bit. I felt I don't know. It was a little bit weird. But I did not think about it till now. But AI, if we need to do less productivity stuff, it's bullish for doom scrolling. It's extremely bullish for doom scrolling. If you're not working all the time, all you're going to be doing is doom scrolling and on whatever
brain
type
rot.
of brain rot. So I can see why Mark is pretty excited about this.
Yeah, I mean, of course, for his business model, I mean, the more you scroll through Instagram Reels, the better. The better for them, for sure. I am running a poll right now asking what earnings call we should do, Meta or Microsoft, because of course Meta starts in 15 minutes, 14 minutes, Microsoft 30 minutes after Meta. So I guess when Meta ends, Microsoft will still go on. So I guess we can start with Meta and then finish off with Microsoft. The unfortunate thing is that the first 15 minutes will just be the script reading and the boring part. But yeah, that's just the way things go with these earnings with his earnings. So we are here a democratic stream. Poll is running, Meta or Microsoft. Whoever
Wait,
wins.
but which was going first, Neil? I mean, obviously
Meta.
we should.
Meta
We
goes
start off with
first.
Meta, and then I don't know if you mentioned it. I was zoning off. Did you mention we start off with Meta, and then whoever wins is who we're gonna stay or switch off to? Was that your plan?
Correct. Plus the fact that Meta ends before Microsoft means that we can go back to Microsoft afterwards. But anyways, it
That is
seems
true.
like 78% want Meta first, and just full on Meta.
Full on Meta. All right. I mean, the Q&A session is probably the fun part anyways, and that's going to be the in theory, what could happen is we take the Q&A session for Meta, and then when that's done, we just jump into the Q&A session of Microsoft.
Yes, it's. I mean, you know, Timon and Pumbaa from Lion King, yeah. When Pumbaa comes up with an idea, and then Timon is like, "Wait a second."
No.
This is exactly this.
Oh man, is that what you've been saying?
Yes,
No,
it's
no.
exactly what I've been saying. It's
That's
exactly
what,
what
that's
I've
what
been
I'm
saying.
here for.
But yeah, I'm quite happy with the reaction of everything for now. Let's have a quick relook at some of the stocks. So Microsoft all-time highs, $550 basically. Meta also all-time high, $755. ARM is down, very well deserved, to $149 or so. I think Hood is now flat. Yeah, basically flat right now. I mean, okay, how much higher can this thing go? I don't know. Qualcomm is down, still 151, back to prices, back to this type of bottom right here. Applied Digital, pulling back a tiny bit, but I think still up 9%, 8% or so. So, okay. Lam Research, still up, still up a little bit. Who else? What did we miss?
Applied Digital. Did you do?
Yeah, I did, but you zone out. So
yeah, I was just looking at chat.
Transmedics is doing. Yeah, Transmedics is doing well, up 5.3%. Let's see. We have people from your favorite place, Jose.
I lost hearing. Give me 1 second.
Jose likes Florida. Let's see. I wonder if Gene Munster has said, "Oh, Meta's earnings are so good, and that's why it's bad for Google." Probably something like that. So Transmedics beat revenue, 157.4 million, 148 expected, earnings per share of 92 cents versus expected 43 cents, and they increased guidance as well. They received FDA approval for the next gen lung trial. So crushed it. Jose, can you hear me?
Yeah, I can hear you. Unfortunately,
here you have someone from your favorite place in Florida.
Yeah. One day, I'll be there. Crocodiles in Florida, it's okay.
Crocodiles, pythons,
old people,
tsunamis. No, not tsunamis, typhoons. European people have extra return these days. I mean, yeah, down a little bit. The euro, the dollar is a bit stronger today. But as long as you don't sell it, you don't convert back to euros, you're good to go. You're good to go. And don't forget that as long as the dollar is weak, you can basically buy more shares in dollars. You basically take your euros and you buy in dollars. That's what I've been doing. So that's that. ARM, why is it down? Was earnings so bad? Not so bad, but when you're that expensive and you're not really showing the huge growth that you're expected to show, then you go down. Apple is down after hours. Yeah, Meanwhile, at Apple HQ, crickets. I mean, other than Tim Cook, I don't know who's going to stay there because Zuck has been poaching talent left, right, and center. So
There's no one there. That's why.
exactly. But you might say Apple is so advanced with their AI that they don't even need people to
anybody.
Yeah, they don't even need anybody at their HQ. Let's see. We're still 79, close to 80% want the Meta. So I guess we're going to have a listen to what
Give
Zuck
the
has
people
to
what
say.
they want.
Exactamundo. And it's quite interesting that Microsoft actually moved before they even gave guidance, because usually it doesn't move. Usually it doesn't move. So now I mean, April was a crazy gift. April was a crazy gift. For the fact that Microsoft is up 60% since, that's nuts. Questionable, I say. He's frozen, so I can say whatever I want, I think. Let's see. Yeah, Applied Digital, we did have a look. Numbers are good, actually. Numbers are good. They gave us a little bit more information on the CoreWeave deal. CoreWeave has exercised their option to add another $4 billion in contract. So now it's $11 billion. Here, $11 billion for the next 15 years approximately, which translates to $733 million. I don't know. Jose is here. Maybe he's not here. Maybe he's half here. Yeah, PayPal is under 70. That's a crime. PayPal under 70 is a crime. Let's see if I got a message. No message. No message. So he's not here. Imagine if Applied Digital becomes the reason we all move to West Palm Beach. Yeah, I mean, wouldn't that be? Let me actually check. West Palm Beach. Yeah, but it's a bit expensive, no? Even if Applied Digital moves, it's quite something. It's quite something. Jose, I cannot hear you, but maybe he's gone. Maybe he's gone. You're gone. Just message him. I can hear you.
I've been here the whole time, but for some reason everything broke.
Yeah, I'm telling you, someone doesn't want us to stream.
I got to reset though. BRB.
But all right. Figma goes public tomorrow. Yeah, you are here, but
Right.
maybe your mic. Yeah, no, your mic is fine. When does Figma? Apparently, Figma goes public tomorrow.
Public tomorrow, does it?
Yeah, it does.
Nice.
Now they're targeting 18.8 billion valuation. It's definitely going to open much higher than that. Much higher than that.
We got a quick comment here, Neil. Jose, my NVIDIA position is so imbalanced. It feels like open heart surgery. Every decision is critical and hard to manage. I mean, I think that's what happens when it grows too quickly and it becomes too much of a portfolio. I think when you start to worry that a position is too big, it's not time to sell off, but maybe trim to whatever your position, comfortable level position is. I think for me right now, it's around 30%. Of my overall portfolio, and that's where I would like to keep it at. I think if it ever goes to like 45, 50, I might start to just sell off just for portfolio allocation purposes. Just because then I feel like I might start to lose a little bit of sleep. But 30%, I think I can still sleep just fine.
Yeah. South Africans do have Dutch names because Afrikaans is basically like Dutch. So a lot of them do have Dutch-like names. For those that have no clue what I'm talking about, it's basically the conversation between two people in my chat right here. So 4 minutes until Meta earnings call starts. It seems like that one is winning at the moment. Let's actually let's have a look at PayPal. Yeah, PayPal is under 70. That's just doesn't make sense. Like the company reported a triple beat, meaning beating earnings and raising guidance, and yet stock is down. Go figure. But tomorrow we do have Alex Chris talking live on X. So that's that. So hopefully he'll talk a little bit more and maybe shock the world.
Neil, I'm gonna step out for
your
some
thing.
time. Yeah,
Yeah.
but I'll leave my stream open so everybody on my channel will be able to listen to the call, and then I'll jump back in.
I can read comments from your channel.
Yeah. All right, so I'll be back, and hopefully we get some nice Q&A from Microsoft.
Yeah. Okay, for sure. So see you soon. Do I speak Dutch? Jawel. Ik spreek Nederlands. Et je parle français aussi. So, yeah, the chat can be multilingual here. We can have a multilingual chat. Let me see. Let me just set up the Meta. Hopefully my sound works actually for Meta. Because imagine if the sound doesn't even work. Well, let's see. I'll I don't want to get copyright striked, so but I am Italian, right? No, Arnie is Italian. I know some people think that I am. Look, yeah, I'm either Bruno Fernandes, which means I am Portuguese, or I'm Arnie, which means I'm Italian, or I'm Neil, which I'm Belgian. So which one is it? I cannot be everyone. Cannot be everyone. So yeah, so that's set up for. Okay, so the sound is good. So that's good. In the meantime, the only thing I can only pull up questions from Jose's channel. So okay, fine. Who am I excited about from Chelsea's new signing? Our strikers I like a lot. Liam Delap, João Pedro. I like them a lot. I like the new signing from Ajax, the defender. Very, very good defender. Very young lad, young chap. Let me just pull this up real quick and see if we got something new in the meantime for you guys. So Wall Street Engine. Wall Street Engine. Anything interesting? Not much. What about our Walter Bloomberg? I thought I was joining a stock chat. You are joining a stock chat, but it's also a chat about everything else. We talk sports, we talk Pokemon cards, we talk Disney movies, we talk everything. Everything you want, we talk here. Okay, so we got some tariff news here as well, if we're still interested in that. We are very busy in the White House today working on trade deals. I will be meeting with South Korean trade delegation this afternoon. South Korea has an offer to buy down a 25% tariff. Other countries are making offers for a tariff reduction. Other than that, that's about it. let's go back now to Meta.
Conference operator today. At this time, I would like to welcome everyone to the Meta second quarter earnings conference call. All lines have been placed on mute to prevent any background
If the
noise.
sound is too loud or
After
too
the
low,
speaker's
let me
remarks,
know.
there will be a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. If you'd like to withdraw your question, again, press star 1. We ask that you limit yourself to one question, and this call will be recorded. Thank you very much. Kenneth Dorell, Meta's Director of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Meta's second quarter 2025 earnings conference call. Joining me today are Mark Zuckerberg, CEO, and Susan Li, CFO. Our remarks today will include forward-looking statements, which are based on assumptions as of today. Actual results may differ materially as a result of various factors, including those set forth in today's earnings press release and in our quarterly report on Form 10-Q filed with the SEC. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.atmeta.com. And now, I'd like to turn the call over to Mark.
All right, thanks, Ken. Thanks, everyone, for joining today. We had another strong quarter with more than 3.4 billion people using at least one of our apps each day and strong engagement across the board. Our business continues to perform very well, which enables us to invest heavily in our AI efforts. Over the last few months, we've begun to see glimpses of our AI systems improving themselves. And the improvement is slow for now, but undeniable. And developing superintelligence, which we define as AI that surpasses human intelligence in every way, we think is now in sight. Meta's vision is to bring personal superintelligence to everyone so that people can direct it towards what they value in their own lives. And we believe that this has the potential to begin an exciting new era of individual empowerment. A lot has been written about all the economic and scientific advances that superintelligence can bring, and I'm extremely optimistic about this. But I think that if history is a guide, then an even more important role will be how superintelligence empowers people to be more creative, develop culture and communities, connect with each other, and lead more fulfilling lives. To build this future, we've established Meta Superintelligence Labs, which includes our foundations, product, and fair teams, as well as a new lab that is focused on developing the next generation of our models. We're making good progress towards Llama 4.1 and 4.2, and in parallel, we are also working on our next generation of models that will push the frontier in the next year or so. We're building an elite, talent-dense team. Alexander Wang is leading the overall team. Nat Friedman is leading our AI products and applied research. And Shengjia Zhao is chief scientist for the new effort. They are all incredibly talented leaders, and I'm excited to work closely with them and the world-class group of AI researchers and infrastructure and data engineers that we're assembling. I've spent a lot of time building this team this quarter, and the reason that so many people are excited to join is because Meta has all of the ingredients that are required to build leading models and deliver them to billions of people. The people who are joining us are going to have access to unparalleled compute as we build out several multi-gigawatt clusters. Our Prometheus cluster is coming online next year, and we think it's going to be the world's first gigawatt plus cluster. We're also building out Hyperion, which will be able to scale up to 5 gigawatts over several years, and we have multiple more Titan clusters in development as well. We are making all these investments because we have conviction that superintelligence is going to improve every aspect of what we do. From a business perspective, I mentioned last quarter that there are 5 basic opportunities that we are pursuing. Improved advertising, more engaging experiences, business messaging, Meta AI, and AI devices. So I can go into a bit of detail on each. On advertising, the strong performance this quarter is largely thanks to AI unlocking greater efficiency and gains across our ad system. This quarter, we expanded our new AI-powered recommendation model for ads to new surfaces and improved its performance by using more signals and longer context. It's driven roughly 5% more ad conversions on Instagram and 3% on Facebook. We're also seeing good progress with AI for ad creative, with a meaningful percent of our ad revenue now coming from campaigns using one of our generative AI features. This is going to be especially valuable for smaller advertisers with limited budgets, while agencies will continue the important work to help larger brands apply these tools strategically. The second opportunity is more engaging experiences. AI is significantly improving our ability to show people content that they're going to find interesting and useful. Advancements in our recommendation systems have improved quality so much that it has led to a 5% increase in time spent on Facebook and 6% on Instagram just this quarter. There is a lot of potential for content itself to get better too. We're seeing early progress with the launch of our AI video editing tools across Meta AI and our new Edits app, and there's a lot more to do here. The third opportunity is business messaging. I've talked before about how I believe every business will soon have a business AI, just like they have an email address, social media account, and website. We're starting to see some product market fit in a number of countries where we're testing these agents, and we're integrating these business AIs into ads on Facebook and Instagram, as well as directly into e-commerce websites. The fourth opportunity is Meta AI. Its reach is already quite impressive with more than 1 billion monthly actives. Our focus is now deepening the experience and making Meta AI the leading personal AI. As we continue improving our models, we see engagement grow. So our next generation of models is going to continue to really help here. And the fifth opportunity is AI devices. We continue to see strong momentum with our Ray-Ban Meta glasses, with sales accelerating. We are also launching new performance AI glasses with the Oakley Meta Houstons. They have longer battery life, higher resolution camera, and are designed for sports. The percent of people using Meta AI is growing, and we are seeing new users' AI retention increase too, which is a good sign for that continued use. I think that AI glasses are going to be the main way that we integrate superintelligence into our day-to-day lives. So it's important to have all of these different styles and products that appeal to different people in different settings. Finally, we're seeing people continue to spend more time with our Quest ecosystem, and the community continues to grow steadily. We launched the Meta Quest 3S Xbox Edition last month, and we're seeing record interest in cloud gaming. And beyond gaming, we continue to see a broader set of use cases, with media and web browsing contributing a significant portion of engagement. We're going to have more to share on all of this, especially the Reality Labs work at Connect on September 17th. So I encourage you all to tune into that. Overall, this has been a busy quarter. Strong business performance and real momentum in assembling both the talent and the compute that we need to build personal superintelligence for everyone. I am very grateful to our teams who are working hard to deliver all of this, and thanks to all of you for being on this journey with us. And now here's Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis unless otherwise noted. Q2 total revenue was $47.5 billion, up 22% on both a reported and constant currency basis. Q2 total expenses were $27.1 billion, up 12% compared to last year. In terms of the specific line items, cost of revenue increased 16%, driven mostly by higher infrastructure costs and payments to partners, partially offset by a benefit from the previously announced extension of server useful lives. R&D increased 23%, mostly due to higher employee compensation and infrastructure costs. Marketing and sales increased 9%, primarily due to an increase in professional services related to our ongoing platform integrity efforts, as well as marketing costs, partially offset by lower employee compensation. G&A decreased 27%, driven mostly by lower legal-related costs. We ended Q2 with over 75,900 employees, down 1% quarter over quarter, as the vast majority of the employees impacted by performance-related reductions earlier this year were no longer captured in our headcount. This was partially offset by continued hiring in priority areas of monetization, infrastructure, Reality Labs, AI, as well as regulation and compliance. Second quarter operating income was $20.4 billion, representing a 43% operating margin. Our tax rate for the quarter was 11%, which reflects excess tax benefits from share-based compensation due to the increase in our share price versus prior periods. Net income was $18.3 billion, or $7.14 per share. Capital expenditures, including principal payments on finance leases, were $17 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $8.5 billion. We repurchased $9.8 billion of our Class A common stock and paid $1.3 billion in dividends to shareholders. We also made $15.1 billion in non-marketable equity investments in the second quarter, which includes our minority investment in Scale AI, along with other investment activities. We ended the quarter with $47.1 billion in cash and marketable securities and $28.8 billion in debt. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow, and we estimate more than 3.4 billion people used at least one of our Family of Apps on a daily basis in June. Q2 total Family of Apps revenue was $47.1 billion, up 22% year over year. Q2 Family of Apps ad revenue was $46.6 billion, up 21% or 22% on a constant currency basis. Within ad revenue, the online commerce vertical was the largest contributor to year-over-year growth. On a user geography basis, ad revenue growth was strongest in Europe and rest of world at 24% and 23% respectively. North America and Asia Pacific grew 21% and 18%. In Q2, the total number of ad impressions served across our services increased 11%, with growth mainly driven by Asia Pacific. Impression growth accelerated across all regions due primarily to engagement tailwinds on both Facebook and Instagram, and to a lesser extent, ad load optimizations on Facebook. The average price per ad increased 9%, benefiting from increased advertiser demand, largely driven by improved ad performance. Pricing growth slowed modestly from the first quarter due to the accelerated impression growth in Q2. Family of Apps other revenue was $583 million, up 50%, driven by WhatsApp paid messaging revenue growth as well as Meta verified subscriptions. We continue to direct the majority of our investments toward the development and operation of our Family of Apps. In Q2, Family of Apps expenses were $22.2 billion, representing 82% of our overall expenses. Family of Apps expenses were up 14%, mainly due to growth in employee compensation and infrastructure costs, partially offset by lower legal-related costs. Family of Apps operating income was $25 billion, representing a 53% operating margin. Within our Reality Labs segment, Q2 revenue was $370 million, up 5% year over year due to increased sales of AI glasses, partially offset by lower Quest sales. Reality Labs expenses were $4.9 billion, up 1% year over year, driven by higher non-headcount related technology development costs. Reality Labs operating loss was $4.5 billion. Turning now to the business outlook. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, daily actives continue to grow across Facebook, Instagram, and WhatsApp as we make additional improvements to our recommendation systems and product experiences. We continue to see momentum with video engagement in particular. In Q2, Instagram video time was up more than 20% year over year globally. We're seeing strong traction on Facebook as well, particularly in the US, where video time spent similarly expanded more than 20% year over year. These gains have been enabled by ongoing optimizations to our ranking systems to better identify the most relevant content to show. We expect to deliver additional improvements throughout the year as we further scale up our models and make recommendations more adaptive to a person's interests within their session. Another emphasis of our recommendations work is promoting original content. On Instagram, over 2/3 of recommended content in the US now comes from original posts. In the second half, we'll be focused on further increasing the freshness of original posts so the right audiences can discover original content from creators soon after it is posted. We are also making good progress on our longer-term ranking innovations that we expect will provide the next leg of improvements over the coming years. Our research efforts to develop cross-surface foundation recommendation models continue to progress. We are also seeing promising results from using LLMs in Threads recommendation systems. The incorporation of LLMs are now driving a meaningful share of the ranking-related time spent gains on Threads. We're now exploring how to extend the use of LLMs in recommendation systems to our other apps. We're leveraging Llama and several other back-end processes as well, including actioning bug reports so we can identify and resolve recurring issues more quickly and efficiently. This has resulted in top-line bug reports in the US and Canada in Facebook feed and notifications dropping by roughly 30% over the past 10 months. The primary way we're using Llama in our apps today is to power Meta AI, which is now available in over 200 countries and territories. WhatsApp continues to be the largest driver of queries as people message Meta AI directly for tasks such as information gathering, homework assistance, and generating images. Outside of WhatsApp, we're seeing Meta AI become an increasingly valuable complement to our content discovery engines. Meta AI usage on Facebook is expanding as people use it to ask about posts they see in feed and find content across our platform in search. Another way we expect Meta AI will help with content discovery is through the automatic translation and dubbing of foreign language content into the audience's local language. We'll have more to share on our efforts there later this year. Moving to Reality Labs. The growth of Ray-Ban Meta sales accelerated in Q2, with demand still outstripping supply for the most popular SKUs, despite increases to our production earlier this year. We're working to ramp supply to better meet consumer demand later this year. Now to the second driver of our revenue performance, increasing monetization efficiency. The first part of this work is optimizing the level of ads within organic engagement. We continue to optimize ad supply across each surface to better deliver ads at the time and place they are most relevant to people. In Q2, we also began introducing ads within Feed on Threads and the Updates tab of WhatsApp, which is a separate space away from people's chats. As of May, advertisers globally can now run video and image ads to Threads users in most countries, including the United States. While ad supply remains low and Threads is not expected to be a meaningful contributor to overall impression growth in the near term, we are optimistic about the longer-term opportunity with Threads as the community and engagement grow and monetization scales. On WhatsApp, we are rolling out ads in status and channels, along with channel subscriptions in the Updates tab to help businesses reach the more than 1.5 billion daily actives who visit that part of the app. We expect the introduction of ads and status will be gradual over the course of this year and next, with low levels of expected ad supply initially. We also expect WhatsApp ads and status to earn a lower average price than Facebook or Instagram ads for the foreseeable future, due in part towards WhatsApp's skew toward lower monetizing markets and more limited information that can be used for targeting. Given this, we do not expect ads and status to be a meaningful contributor to total impressions or revenue growth for the next few years. The second part of increasing monetization efficiency is improving marketing performance. There are 3 areas of this work that I'll focus on today: improving our ad systems, advancing our ads products, including by building tools that assist in ads creation, and evolving our ads platform to drive results that are optimized for each business's objectives. First is our ad systems, where we're innovating in both the ads retrieval and ranking stages to serve more relevant ads to people. A lot of this work involves us continuing to advance the modeling innovations we've introduced previously while expanding their adoption across our platform. The Andromeda model architecture we began introducing in the second half of 2024 powers the ads retrieval stage of our ad system, where we select the few thousand most relevant ads from tens of millions of potential candidates. In Q2, we made enhancements to Andromeda that enabled it to select more relevant and more personalized ads candidates, while also expanding coverage to Facebook Reels. These improvements have driven nearly 4% higher conversions on Facebook mobile feed and Reels. Our new generative ads recommendation system, or GEM, powers the ranking stage of our ad system, which is the part of the process after ads retrieval where we determine which ads to show someone from candidates suggested by our retrieval engine. In Q2, we improved the performance of GEM by further scaling our training capacity and adding organic and ads engagement data on Instagram. We also incorporated new advanced sequence modeling techniques that helped us double the length of event sequences we use, enabling our systems to consider a longer history of the content or ads that a person has engaged with in order to provide better ad selections. The combination of these improvements increased ad conversions by approximately 5% on Instagram and 3% on Facebook feed and Reels in Q2. Finally, we expanded coverage of our Lattice model architecture in Q2. We first began deploying Lattice in 2023 with our later stage ads ranking efforts, allowing us to run significantly larger models that generalize learnings across objectives and surfaces in place of numerous smaller ads models that have historically been optimized for individual objectives and surfaces. In April, we began deploying Lattice to earlier stage ads ranking models as well. This is leading not only to greater capacity and engineering efficiency, but also improved performance, with the recent Lattice deployments driving a nearly 4% increase in ad conversions across Facebook feed and Reels in Q2. Next, ad products. Here we're seeing strong momentum with our Advantage Plus suite of AI-powered solutions. In Q2, we completed the rollout of our streamlined campaign creation flow for Advantage Plus sales and app campaigns, which makes it easier for advertisers to realize the performance benefits from Advantage Plus by having it turned on at the beginning. We've seen lifts in advertiser adoption of sales and app campaigns since we've expanded availability and are working to complete the rollout for leads campaigns in the coming months. Within our Advantage Plus Creative Suite, adoption of GenAI ad creative tools continues to broaden. Nearly 2 million advertisers are now using our video generation features, image animation and video expansion, and we're seeing strong results with our text generation tools as we continue to add new features. In Q2, we started testing AI-powered translation so that advertisers can automatically translate the caption of their ads to 10 different languages. While it's early, we've seen promising performance lifts in our pre-launch tests. We're also continuing to see strong adoption of image expansion among small and medium-sized advertisers, which speaks to how these tools help businesses who have fewer resources to develop creative. With larger advertisers, we expect agencies will continue to be valuable partners in helping apply these new tools to drive performance. Outside of Advantage Plus, we're seeing good momentum in business messaging, particularly in the US, where click-to-message revenue grew more than 40% year over year in Q2. The strong US growth is benefiting from a ramp in adoption of our website-to-message ads, which drive people to a business's website for more information before choosing to launch a chat with the business in one of our messaging apps. Finally, we continue to evolve our ads platform to drive results that are optimized for each business's objectives and the way they measure results. In Q2, we completed the global rollout of our incremental attribution feature, which is the only product on the market that optimizes for and reports on incremental conversions, which are conversions that would not have happened without a person seeing the ad. We also launched omni-channel ads globally in Q2, which enable advertisers to optimize for incremental sales both in-store and online with just one campaign. In tests, advertisers using omni-channel ads have seen a median 15% reduction in total cost per purchase compared to website-only optimization. Next, I would like to discuss our approach to capital allocation. Our primary focus remains investing capital back into the business, with infrastructure and talent being our top priorities. I'll start with hiring. Our approach to adding headcount continues to be targeted at the company's highest priority areas. We expect talent additions across all of our priority areas will continue to drive overall headcount growth through this year in 2026, while headcount growth in our other functions remains constrained. Within AI, we've had a particular emphasis on recruiting leading talent within the industry as we build out Meta Superintelligence Labs to accelerate our AI model development and product initiatives. Next, infrastructure. We expect having sufficient compute capacity will be central to realizing many of the largest opportunities in front of us over the coming years. We continue to see very compelling returns from our AI capacity investments in our core ads and organic engagement initiatives, and expect to continue investing significantly there in 2026. We also expect that developing leading AI infrastructure will be a core advantage in developing the best AI models and product experiences. So we expect to ramp our investments significantly in 2026 to support that work. Moving to our financial outlook. We expect third quarter 2025 total revenue to be in the range of $47.5 to $50.5 billion. Our guidance assumes foreign currency is an approximately 1% tailwind to year-over-year total revenue growth based on current exchange rates. While we are not providing an outlook for fourth quarter revenue, we would expect our year-over-year growth rate in the fourth quarter of 2025 to be slower than the third quarter as we lap a period of stronger growth in the fourth quarter of 2024. Turning now to the expense outlook. We expect full year 2025 total expenses to be in the range of $114 to $118 billion, narrowed from our prior outlook of $113 to $118 billion, and reflecting a growth rate of 20 to 24% year over year. While we're still very early in planning for next year, there are a few factors we expect will provide meaningful upward pressure on our 2026 total expense growth rate. The largest single driver of growth will be infrastructure costs, driven by a sharp acceleration in depreciation expense growth and higher operating costs as we continue to scale up our infrastructure fleet. Aside from infrastructure, we expect the second largest driver of growth to be employee compensation as we add technical talent in priority areas and recognize a full year of compensation expenses for employees hired throughout 2025. We expect these factors will result in a 2026 year-over-year expense growth rate that is above the 2025 expense growth rate. Turning now to the CAPEX outlook. We currently expect 2025 capital expenditures, including principal payments on finance leases, to be in the range of $66 to $72 billion, narrowed from our prior outlook of $64 to $72 billion, and up approximately $30 billion year over year at the midpoint. While the infrastructure planning process remains highly dynamic, we currently expect another year of similarly significant CAPEX dollar growth in 2026, as we continue aggressively pursuing opportunities to bring additional capacity online to meet the needs of our AI efforts and business operations. On to tax. With the enactment of the new U.S. tax law, we anticipate a reduction in our U.S. federal cash tax for the remainder of the current year and future years. There are several alternative ways of implementing the provisions of the Act, which we are currently evaluating. While we estimate that the 2025 tax rate will be higher than our Q2 tax rate, we cannot quantify the magnitude at this time. In addition, we continue to monitor an active regulatory landscape, including the increasing legal and regulatory headwinds in the EU that could significantly impact our business and our financial results. For example, we continue to engage with the European Commission on our less personalized ads offering, or LPA, which we introduced in November 2024, based on feedback from the European Commission in connection with the DMA. As the Commission provides further feedback on LPA, we cannot rule out that it may seek to impose further modifications to it that would result in a materially worse user and advertiser experience. This could have a significant negative impact on our European revenue as early as later this quarter. We have appealed the European Commission's DMA decision, but any modifications to our model may be imposed during the appeal process. In closing, this was another strong quarter for our business as our investments in infrastructure and technical talent continue to improve core ads performance and engagement on our platforms. We expect the significant investments we're making now will allow us to continue leveraging advances in AI to extend those gains and unlock a new set of opportunities in the years to come. With that, Krista, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, please press star 1 on your touchtone phone. To withdraw your question, again, press star 1. Please limit yourself to 1 question. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from the line of Eric Sheridan with Goldman Sachs. Please go ahead.
Thanks so much for taking the questions. Mark, when you think about where the AI parts of your business have been evolving over the last 3 to 6 months, wanted to know what your key learnings were as you went deep into that strategy that informed some of the shifts in both talent acquisition and compute, coupled with some of the blogs you put out recently in terms of how that strategy might have evolved based on those key learnings. And Susan, building on Mark's comments on scaling talent and compute, I want to know if you go a little bit deeper in how we should be thinking about those 2 components driving some of the commentary you've given around OPEX and CAPEX over the next 12 to 18 months. Thanks so much.
Yeah, sure. I can start. At a high level, I think that there are all these questions that people have about what are going to be the timelines to get to really strong AI or super intelligence or whatever you want to call it. And I guess at each step along the way so far, we've observed the more kind of aggressive assumptions or the fastest assumptions have been the ones that have most accurately predicted what would happen. And I think that just continued to happen over the course of this year too. And so I've given a number of those anecdotes on these earnings calls in the past. And I think certainly some of the work that we're seeing with teams internally being able to adapt Llama 4 to build autonomous AI agents that can help improve the Facebook algorithm to increase quality and engagement are that's like a fairly profound thing if you think about it. I mean, it's happening in low volume right now, so I'm not sure that result by itself was a major contributor to this quarter's earnings or anything like that. But I think the trajectory on this stuff is very optimistic. And I think it's one of the interesting challenges in running a business like this now is there's just a very high chance, it seems, like the world is going to look pretty different in a few years from now. And on the one hand, there are all these things that we can do. There are improvements to our core products that exist. And then I think we have this principle that we believe in across the company, which we tell people, take super intelligence seriously. And the basic principle is this idea that that we think that this is going to really shape all of our systems sooner rather than later, not necessarily on the trajectory of a quarter or 2, but on the trajectory of a few years. And I think that that's just going to change a lot of the assumptions around how different things work across the company. So anyway, I think it's basically just we're continually observing how this works, what the trajectory or the pace of AI progress has been. I think it continues to be on the faster end. And that, I think, informs a lot of the decisions, from everything from the importance and value of having the absolute best and most elite talent-dense team at the company, to making sure that we have a leading compute fleet so that the people here can do, so the researchers here have more compute per person to be able to lead their research and then roll it out to billions of people across our products, making sure that we build and drive these products through all of the different things that we do. which I think is one of the things that our company is the best in the world at, is basically, when we take a technology, we're good at driving that through all of our apps and our ad systems and all that stuff. It's not just going to kind of sit on the vine. I think that there's no other company, I think, that is as good as us at kind of taking something and kind of getting it in front of billions of people. So yeah, I mean, we're just going to push very aggressively on all of that. But at some level, yeah, there's sort of a bet in the trajectory that we're seeing, and those are the signals that we're seeing. But we're just trying to read it.
Eric, for the second part of your question, we haven't in fact kicked off our budgeting process for 2026. So thinking about next year, there are clearly many moving pieces in a very dynamic operating environment. But there are certain aspects that we have some visibility into today, including the rough shape of our 2026 infrastructure plans, and that flows through into our expense expectations next year. And we also have some visibility into the compensation expense growth that we'll recognize from the AI talent that we're hiring this year. And so those two things are part of why we gave a little bit of an early preview into the expectations for growth for 2026 total expenses, as well as for 2026 CapEx. So on the total expenses side, as I mentioned, we expect infrastructure will be the single largest contributor to 2026 expense growth. That's driven primarily by a sharp acceleration in depreciation expense growth in 2026, largely driven by recognizing incremental depreciation from assets that we purchase and place in service in 26, as well as from infrastructure deployed through 2025 that will recognize a full year of depreciation next year. We also expect a greater mix of our CapEx to be in shorter-lived assets in 2025 and 26 than it has been in prior years. And then the other component of infra cost growth next year would come from higher operating expenses, including energy costs, leases, maintenance, and operational expenses that are associated with maintaining that fleet. And we also expect some increased spend on cloud services in 26 to meet our capacity needs, as well as growth in network-related costs. So a lot going on the infrastructure side as it contributes to the 2026 total expense number. After that, employee compensation is the next largest driver of expense growth in 26, again, driven primarily in the investments that we're making in technical talent, including recognizing a full year of compensation expense for the AI talent we hire this year. I realize this answer is getting a little long, so I'll try to wrap up quickly. On the CapEx side, the big driver of our increased CapEx in 26 will be scaling Gen AI capacity as we build out training capacity. That's going to drive higher spend across, servers, networking, data centers next year. We also expect that we're going to continue investing significantly in core AI in 2026. And again, this is a pretty, very dynamic area of planning, but we wanted to share kind of our early thoughts as things are shaping up.
Your next question comes from the line of Brian Nowak with Morgan Stanley. Please go ahead.
Great. Thanks for taking my question. I have two. The first one, Mark, just to kind of go back to the intelligence labs and sort of the vision for super intelligence. As you sort of sit here now versus 12 months ago, can you just sort of walk us through any changes of technological constraints or technological gating factors that you are most focused on overcoming in the next 24 months that may have been different than they were in the past, just to make sure you can really lead in the idea of super intelligence over the next 10 years? And then the second one, to Susan or Mark, one on the core. You've made so many improvements to the core to drive higher engagement, recommendations, et cetera. Can you just walk us through a couple of the factors you're still most excited about to come in the next 18 months that you think could drive further lifts to engagement on the core platform? Thanks.
Yeah, sure. I mean, in terms of the research agenda and a bunch of the areas that we're very focused on, I do think focusing on self-improvement is a very important area of research. And there's obviously different scaling paradigms, and I don't want to get too much into the detail of research that we're doing on this. But I think that for developing super intelligence, at some level, you're not just going to be learning from people because you're trying to build something that is fundamentally smarter than people. So it's going to need to learn how to where you're going to need to develop a way for it to be able to improve itself. So that I think is a very fundamental thing that is going to have very broad implications for how we build products, how we run the company, new things that we can invent, new discoveries that can be made, society more broadly. I think that's just a very fundamental part of this. In terms of the shape of the effort overall, I guess I've just gotten a little bit more convinced around the ability for small talent-dense teams to be the optimal configuration for driving frontier research. And it's a bit of a different setup than we have on our other world-class machine learning systems. So if you look at like what we do in Instagram or Facebook or our ad system, we can very productively have many hundreds or thousands of people basically working on improving those systems. And we have very well-developed systems for kind of individuals to run tests and be able to test a bunch of different things. You don't need every researcher there to have the whole system in their head. But I think for this, for the leading research on superintelligence, you really want the smallest group that can hold the whole thing in their head, which drives, I think, some of the physics around the team size and the dynamics around how that works. But I'll hand it over to Susan to talk about more of the practical stuff.
Brian, on the sort of forward-looking roadmap for the core recommendation engine, there are a handful of shorter-term things that we're focused on in the nearer term. One is we're focused on making recommendations even more adaptive to what a person is engaging with during their session, so that the recommendations we surface are the most relevant to what they're interested in at that moment. And we're making optimizations to help the best content from smaller creators break out by matching it to the right audiences sooner after it gets posted. And we're also working on improving the ability for our systems to discover more diversified and niche interests for each person through interest exploration and learning explicit user preferences. We're also planning to scale up our models further and incorporate more advanced techniques that should improve the overall quality of recommendations. But we also have a lot of long-term bets in the hopper around areas like developing foundational models that will support recommendations across multiple services, incorporating LLMs more deeply into our recommendation systems. And a big focus of this work is going to be on optimizing the systems to make them more efficient, so that we can continue to scale up the capacity that we use for our recommendation systems without eroding the ROI that we deliver.
Your next question comes from the line of Doug Anmuth with JP Morgan. Please go ahead.
Thanks so much for taking the questions. One for Mark and one for Susan. Mark, Meta has been a huge proponent of open source AI. How's your thinking changed here at all, just as you pursue super intelligence and push for even greater returns on your significant infrastructure investments? And then Susan, your comments on 26 CAPEX suggest more than $100 billion of spend next year potentially. Do you continue to expect to finance all this yourself, or could there be opportunities to partner here? Thanks.
Yeah, I mean, on open source, I don't think that our thinking has particularly changed on this. We've always open sourced some of our models and not open sourced everything that we've done. So I would expect that we will continue to produce and share leading open source models. I also think that there are a couple of trends that are playing out. One is that we're getting models that are so big that they're just not practical for a lot of other people to use. So we kind of wrestle with whether it's productive or helpful to share that, or if that's really just primarily helping competitors or something like that. So I think that there's that concern. And then obviously, as you approach real superintelligence, I think there's a whole different set of safety concerns that I think we need to take very seriously, that I wrote about in my note this morning. But I think the bottom line is I would expect that we will continue open sourcing work. I expect us to continue to be a leader there. And I also expect us to continue to not open source everything that we do, which is a continuation of kind of what we've been kind of working on. And yeah, I mean, I think Susan will talk a little bit more about the infrastructure, but it really is a massive investment. We think it will be good over time. But we do take very seriously that this is a just massive amount of capital to convert into many gigawatts of compute, which we think is going to help us produce leading research and quality products. And in running the business, I do look for opportunities to basically convert capital into quality of product that we can deliver for people. But this is certainly a massive bet that we're focused on, and we want to make sure that what we build accrues to building the best products that we can deliver to the billions of people who use our services.
Doug, on your second question about how we expect to finance the growing CapEx next year, we certainly expect that we will finance some large share of that ourselves, but we're also exploring ways to work with financial partners to co-develop data centers. We don't have any finalized transactions to announce, but we generally believe that there will be models here that will attract significant external financing to support large-scale data center projects that are developed using our ability to build world-class infrastructure while providing us with flexibility should our infrastructure requirements change over time. So we are exploring many different paths.
Your next question comes from the line of Justin Post with Bank of America. Please go ahead.
Great, thank you. I'll ask another one on the infrastructure. Mark, your spend is now approaching some of the biggest hyperscalers out there. Do you think of all this capacity mostly for internal uses, or do you think there's a way to share or even come up with a business model where leveraging that capacity for external uses? And then Susan, when you think about the ROI on this CapEx, I'm sure you have internal models. I'm sure you can't share all that, but how are you thinking about the ROI, and are you optimistic about the long-term returns? Thank you.
Justin, I can go ahead and take a crack at both of those, and obviously, Mark, you should feel free to weigh in. Right now we are focused on ensuring that we have enough capacity for our internal use cases, which includes both all of the core AI work that we do to support the recommendation engine work on the organic content side, to support all the ads ranking and recommendation work, and then of course to make sure that we are building the training capacity that we think we need in order to build frontier AI models, and to make sure that we're preparing ourselves for the types of inference use cases that we think that we might have ahead of us as we eventually focus not only on developing frontier models, but also how we can expand into the kinds of consumer use cases that we think will be hopefully widely useful and engaging for our users. So at present, we're not really thinking about external use cases on the infrastructure, but it's a it's a good question. On your second question, which is really around the sort of ROI on CapEx, there are a couple things. So again, on the core AI side, we continue to see strong ROI. Our ability to measure that is quite good, and we feel sort of very good about the rigorous measurement and returns that we see there. On the Gen AI side, we are clearly much earlier on the return curve, and we don't expect that the Gen AI work is going to be a meaningful driver of revenue, this year or next year. But we remain, generally very optimistic about the monetization opportunities that will open up, and Mark spoke to them in his script, the sort of 5 pillars, so I won't repeat them here. And we think that over the medium to long-term timeframe, those are opportunities that are very adjacent and intuitive to, for in terms of where our business is today, why they would be big opportunities for us, and that there will be sort of big markets attached to each of them. So, we again are also, I would say the last thing I would add here is we are building the infrastructure with fungibility in mind. Obviously, there are a lot of things that you have to build up front in terms of the data center shells, the networking infrastructure, et cetera. But we will be, ordering servers, which ultimately will be the biggest bulk of CapEx spend as we need them, and when we need them, and making sort of the best decisions at those times in terms of figuring out, where the capacity will go to use.
Your next question comes from the line of Mark Shmulik with Bernstein. Please go ahead.
Yes, thank you for taking my questions. Mark, as you go after the superintelligence vision, especially for those of us on the outside, what are kind of some of the markers or KPIs that you're tracking on whether, you're on track and making progress? Is it really against kind of those 5 pillars you outlined above, or should we be thinking more broadly? And, Susan, obviously AI, delivering great ROI today, all those investments, and also building towards kind of longer term goals. Just curious, has there just been any change or adjustment to how you think about the relationship between revenues or core business performance and the cadence of investment? Thank you.
Yeah, in terms of what to look at, I mean, what I'm going to look at internally, the quality of the people on the teams, the quality of the models that we're producing, the rate of improvement of our other AI systems across the company, and the extent to which the leading kind of foundation models that we're building contribute to improving all of the other AI systems and kind of everything that we're doing around the company. Then I think you just get into our standard product and business playbook, which is translating that technology into new products, which will first scale to billions of people, and then over time we will monetize. But I think that there's going to be some lag in that, right? And that I think is kind of always the way that we work is, well, whether we're building some new social product or this something like Meta AI or a new product around this. We're going to work on getting to leading scale, building the highest quality product, focus on that for a few years, and then once we're really confident in that position, then we'll focus on ramping up the business around it. So it's I mean, going back to the last question a little bit, it's sort of when you compare this business to some of the cloud businesses, it's like we do have this delay where we focus on building research and then doing research, then ramping consumer products, and it often does take some period of time before we really are ramping up the business around it. I think that's kind of a known property of our business and the cycle around it. But I guess on the flip side, we believe that if you are building super intelligence, you should use all of your GPUs to make it so that you're serving your customers really well with that. And we think that there's going to be a much higher return that we can do by generating that directly rather than just kind of renting or leasing out the infrastructure at other companies.
On the second part of your question, we've said in the past that our primary focus from a profitability perspective is driving consolidated operating profit growth over time. And it won't be linear. In some years, we'll deliver above average profit growth. And in years where we're making big investments, I think we will see that impact the amount of operating profit growth that we can deliver. And at the moment, we see a lot of attractive investment opportunities that we believe are going to set us up to deliver compelling profit growth in the coming years, for all of our investors. And so we're focused on constraining investments elsewhere as we pursue those investments. But we really believe that, this is a time for us to really make investments in the future of AI, as I think it will open up both new opportunities for us in addition to strengthen our core business.
Your next question comes from the line of Ron Josey with Citi. Please go ahead.
Great. Thanks for taking the question. Mark, I wanted to ask you on Meta AI, and I think you talked about in the call just growing engagement overall, particularly on WhatsApp. And now we have 1 billion users on the platform, and the focus is now on driving personalization. So I want to understand a little bit more how these next-gen models can help drive adoption here, particularly with Behemoth coming online at some point. And then as, people are using Meta AI with WhatsApp, thoughts on search and queries and potentially monetizing that. Thank you.
Yeah, I'm not going to get super deep into the roadmap on this, but the basic, we do see that as we continue improving the models behind Meta AI and post-training, it just engagement increases. And as we swap in the updated models, when we go from Llama 4 to Llama 4.1, when we have that, we expect that, just the models are inherently pretty general. So it's, you focus on specific areas, but in general, just sort of gets better at a lot of different things that people want to ask it or want to do with it. I think with each version, both like what we're doing on a week-to-week basis in terms of continuing to train it, and when we drop kind of new generations or big dot releases of each generation, that will improve engagement too. So we're focused on that. I'm not going to go into the specific research areas or capabilities that we're planning on dropping in the future, but I obviously I'm pretty excited about it.
Thank you.
Our last question comes from the line of Youssef Squali with Truist Securities. Please go ahead.
Great. Thank you guys for taking the question. I have two. So, Mark, the Ray-Ban initiative has been a hallmark for you guys so far. Where are we on the development of glasses as that new computational platform that you've talked about in the past? Is it moving faster or slower than you thought? And as you leverage Meta AI, do you believe glasses ultimately replace smartphones, or do you need the new form factor that's AI first? And then, Susan, just quickly, how do you guys see SBC progressing over the next couple of years? Is it fair to assume it'll grow materially faster than revenue and OPEX? And how do you minimize shareholder dilution? Thank you.
Yeah, I can talk a bit about the glasses. Yeah, I mean, I'm very excited about the progress that we're making. I think both the Ray-Ban Metas and I'm very excited about the Oakley Meta, the Houstons too, and other things that we have planned. Yeah, I mean, this product category is clearly doing quite well. And I think it's good for a lot of things. It is stylish eyewear, so people like wearing them just as glasses. It has a bunch of interesting functionality, and then the use of Meta AI in them just continues to grow, and the percent of people who are using it for that on a daily basis is increasing, and that's all good to see. I mean, I continue to think that glasses are basically going to be the ideal form factor for AI, because you can let an AI see what you see throughout the day, hear what you hear, talk to you. Once you get a display in there, whether it's the kind of wide holographic field of view like we showed with Orion, or just a smaller display that might be good for displaying some information, then that's also going to unlock a lot of value, where you can just interact with an AI system throughout the day in this multimodal way. It can see the content around you, it can generate a UI for you, show you information and be helpful. I mean, I personally think that, just like, if I wear contact lenses, I feel like if I didn't have my vision corrected, I'd be sort of at a cognitive disadvantage going through the world. And I think in the future, if you don't have glasses that have AI or some way to interact with AI, I think you're kind of similarly probably be at a pretty significant cognitive disadvantage compared to other people and who you're working with or competing against. So I think that this is a pretty fundamental form factor. There are a lot of different versions of it. Right now, we're building ones that I think are stylish, but aren't focused on the display. I think there's a whole set of different things to explore with displays. This is kind of what we've been maxing out with Reality Labs over the last 5 to 10 years, is basically doing the research on all of these different things. And it's I don't know, 10 years ago, I would have, like the other thing that's awesome about glasses is they are going to be the ideal way to blend the physical and digital worlds together. So the whole metaverse vision, I think, is going to end up being extremely important too, and AI is going to accelerate that too. It's just that if you'd asked me 5 years ago whether we'd have kind of holograms that created immersive experiences or super intelligence first, I think most people would have thought that you'd get the holograms first. And it's this interesting kind of quirk of the tech industry that I think we're going to end up having really strong AI first. But because we've been investing in this, I think we're just several years ahead on building out glasses. And I think that's something that we're excited to keep on investing in heavily, because I think it's going to be a really important part of the future.
Yusuf, we didn't quite catch your second question. Do you mind just repeating it?
Sure. Just as you look at the spend on stock-based compensation over the next couple of years with all these hires, I'm assuming that we're going to see that materially or grow materially faster maybe than revenue and OPEX. And just want to know what you guys are doing to plan to minimize shareholder dilution. Is it mostly buybacks or anything else? Thank you.
Thanks, Yusuf. So, I mean, the impact of, the sort of increased compensation costs, including SBC, of our AI hires this year is reflected in the revised 2025 expense outlook and in the comments I made about sort of the 2026 expense outlook. Those are obviously a big driver of 2026 expense growth as we recognize the full year of compensation for the additional talent we're bringing on. Having said that, so we've factored that into our sort of expense outlook. Having said that, we certainly, we are very focused on making sure, on keeping an eye on dilution. And, we generally believe that our strong financial position is going to allow us to support these investments while continuing to repurchase shares as part of the sort of buyback program that offsets equity compensation and as well as provide quarterly cash dividend distributions to our investors.
Great. Thank you, everyone, for joining us today. We look forward to speaking with you again soon.
Okay. Jose is back, so you can control your chat if something pops up. I already skipped all the way to the outlook for Microsoft. I've put it also at 1.25 speed so we can catch up faster.
Okay.
My commentary for both the full year and next quarter is on a U.S. dollar basis unless specifically noted otherwise. Let me start with some full year commentary for FY26. First, FX. Assuming current rates remain stable, we expect FX to increase full year revenue growth and COGS growth by approximately 2 points and to increase operating expense growth by 1 point. Next, building on the strong momentum we saw this past year, we expect to deliver another year of double-digit revenue and operating income growth in FY26. We will continue to invest against the expansive opportunity ahead across both capital expenditures and operating expenses, given our leadership position in commercial cloud, strong demand signals for our cloud and AI offerings, and significant contracted backlog. Capital expenditure growth, as we shared last quarter, will moderate compared to FY25 with a greater mix of short-lived assets. Due to the timing of delivery of additional capacity in H1, including large finance lease sites, we expect growth rates in H1 will be higher than in H2. We remain focused on delivering revenue growth and increasing our operational agility, and as a result, we expect operating margins to be relatively unchanged year over year. And finally, we expect our FY26 effective tax rate to be between 19% and 20%. Now to our outlook for the first quarter. Based on current rates, we expect FX to increase total revenue growth by 2 points. Within the segments, we expect FX to increase revenue growth by roughly 3 points in productivity and business processes and roughly 1 point in intelligent cloud and more personal computing. We expect FX to increase COGS and operating expense growth by roughly 1 point. In commercial bookings, we expect healthy growth on a growing expiry base. Bookings growth will again be driven by strong execution across our core annuity sales motions and long-term commitments to our platform. As a reminder, larger long-term measure contracts, which are more unpredictable in their timing, drive increased quarterly volatility in our bookings growth rate. Microsoft Cloud gross margin percentage should be roughly 67%, down year over year, driven by the impact of continuing to scale our AI infrastructure. We expect Q1 capital expenditures to be over $30 billion, driven by the continued strong demand signals we see. As a reminder, there can be quarterly spend variability from cloud infrastructure buildouts and the timing of delivery of finance leases. Next, to segment guidance. In productivity and business processes, we expect revenue of $32.2 to $32.5 billion US dollars, or growth of 14 to 15%, with roughly 3 points of benefit from FX, as noted earlier. In M365 Commercial Cloud, we expect revenue growth to be between 13 and 14% in constant currency, with business trends that remain relatively stable compared to the prior quarter. ARPU growth will again be driven by E5 and M365 Copilot. M365 Commercial Products revenue growth should be in the mid to high single digits. As a reminder, M365 Commercial Products includes both the Windows Commercial on-premises components of M365 Suites and Office transactional purchasing, both of which can be variable due to in-period revenue recognition dynamics. M365 Consumer Cloud revenue growth should be in the low 20s, driven by the January price increase. For LinkedIn, we expect revenue growth in the high single digits. And in Dynamics 365, we expect revenue growth to be in the high teens, with continued growth across all workloads. For Intelligent Cloud, we expect revenue of $30.1 to $30.4 billion US dollars, or growth of 25 to 26%, with roughly 1 point of benefit from FX, as noted earlier. Revenue will continue to be driven by Azure, which can have quarterly variability in year-on-year growth rates depending on the timing of capacity delivery and when it comes online, as well as from in-period revenue recognition, depending on the mix of contracts. In Azure, we expect Q1 revenue growth of approximately 37% in constant currency, driven by strong demand for our portfolio of services on a significant base. Even as we continue bringing more data center capacity online, we currently expect to remain capacity constrained through the first half of our fiscal year. In our on-premises server business, we expect revenue to decline in the low to mid-single digits with the ongoing customer shift to cloud offerings. In more personal computing, we expect revenue to be $12.4 to $12.9 billion US. Windows OEM and devices revenue should decline in the mid to high single digits. We expect the elevated inventory levels at the end of Q4 to come down through the quarter in Windows OEM, although the range of potential outcomes remains wider than normal. Devices revenue should decline. Search and news advertising ex-TAC revenue growth should be in the low to mid-teens, down sequentially as growth rates normalize, following the benefit from third-party partnerships noted earlier. Growth will continue to be driven by volume and revenue per search across Edge and Bing. Overall search and news advertising revenue growth should be in the low double digits. And in gaming, we expect revenue to decline in the mid to high single digits. Against a strong prior year comparable, we expect Xbox content and services revenue to decline in the mid-single digits. Now back to company guidance. We expect COGS of $24.3 to $24.5 billion US, or growth of 21 to 22%. An operating expense of $15.7 to $15.8 billion US, or growth of 5 to 6%. Other income and expense is estimated to be negative $1.3 billion, primarily due to investments accounted for under the equity method. As a reminder, we do not recognize mark-to-market gains or losses on equity method investments. And lastly, we expect our Q1 effective tax rate to be between 19 and 20%. In closing, we finished the year with double-digit revenue and operating income growth and exceeded the FY25 operating margin commitment we shared a year ago. Our focus remains on investing in security, quality, and AI platform and product innovation that delivers value and opportunity to our customers. We are excited for FY26. With that, let's go to Q&A, Jonathan.
Thanks, Amy. We'll now move over to Q&A. Out of respect for others on the call, we request that participants please only ask one question. Operator, can you please repeat your instructions?
Thank you. Ladies and gentlemen, if you would like to ask a question, please press star 1 on your telephone keypad, and the confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. And our first question comes from the line of Keith Weiss with Morgan Stanley. Please proceed.
Excellent. Thank you guys for taking the question, and congratulations on a fantastic end to FY25. I've been covering Microsoft for a while. I don't think I've ever seen a quarter where everything came together this well. So congratulations on that.
Do you want to ask a question, or what's going on here?
Are we back? Are we cut off, Neil?
I don't think so.
No, not yet.
Maybe. I don't know. I know I'm moving forward here with the timeline, but there's nothing.
Just refresh that and let's start from the beginning.
The next question comes from the line of Mark Moerdler with Bernstein Research.
The problem was with them, not with me.
Thank you. I'd also give you my congratulations. It's amazing. I didn't know how you were going to beat last quarter, and you did it, so congratulations. And thank you for taking my question. Satya and Amy, we're now 2+ years into the Gen AI revolution, and adoption is still early and ramping. What do you think is the best way that software companies are going to be able to monetize AI for SaaS? Do you believe there are differences in monetization for horizontal, more general apps like M365 Copilot or Dynamics CRM Copilot versus very targeted capacities on the agentic side? And also, how should you think about the trajectory of SaaS AI margins over the long term? Thank you.
Yeah, I'll start, and Amy, you should feel free to add. I mean, if I just broaden out beyond just SaaS as a category, I think just like, the server to cloud transition was an expansion of essentially usage of servers. That is essentially what happened with the cloud, right? Which is we did a bunch of servers, except that the expertise required, the capital required, the time required to bring up servers, build it out, scale it, was just all hard. And so therefore, the market was a certain size, whereas with the cloud, you could sort of buy it with flexibility, you could burst, and you could spin up and spin down. The expertise required came down. So it was just, orders of magnitude. That's what's happening, So if you sort of even subscribe to this point of view that intelligence is basically log of compute, that means compute's going to grow, and you've got to use it as efficiently as possible to just keep creating intelligence. Now, how does it manifest beyond just the infrastructure? I kind of, to Keith's earlier question, I talked a little bit about how the infrastructure is getting shaped, data layer is getting shaped, the app server is getting built. These are all classic categories of infrastructure that will continue, but they will be an order or two of magnitude more. So literally, in fact, one of the other things we track is every GPU requires storage and compute. That ratio is another thing that is really exponential for infrastructure growth. So when you go to the app layer, the SaaS apps themselves are now building in effectively agentic and chat interfaces with intelligence, and they're also building autonomous agents. Agents are kind of like applications, like a database application, perhaps, but they are being used increasingly inside of a user interaction. I think a good example is GitHub Copilot. It got started as code completions on an IDE. Then we added the chat interface to it. Then we added the agent mode to it. And now we have an autonomous agent, which in fact works completely asynchronously, right? So all those four things are now part of essentially GitHub. And by the way, it also turns out that every other tool that is also doing any form of coding is adding more and more GitHub repos. So if I had to think about GitHub monetization, we have an opportunity around just monetizing GitHub Enterprise, and then we have the ability to think about GitHub Copilot, and GitHub Copilot as with all these form factors. And so that's exactly the same thing that's happening with Microsoft 365. That's the same thing that's happening with Dynamics 365. So you have to be very open to taking your data tier, your business logic tier, and your UI tier, and sort of being more expansive in it. As long as you do that, it's just that usage goes up, and that's what I think shows up in the results.
And I think, Mark, if you wanted to think about, all the things in the layers that you talked about, is really we're seeing very similar monetization tools exist in this transition too, right? There's a per user logic, there's tiers of per user. Sometimes those tiers relate to consumption. Sometimes there's pure consumption models. I think you'll continue to see a blending of these, especially as the AI model capability grows. You'll end up with ways that teams are going to want to throttle that usage, use the best models for the best job. And I think the blending of these models will continue to be something we see on a go-forward basis.
Thank you. I appreciate it.
Thanks, Mark. Operator, next question, please.
The next question comes from the line of Karl Keirstead with UBS. Please proceed.
Okay, thanks. Satya and Amy, this is the second quarter in a row of pretty material Azure upside from what sounds like an acceleration in on-prem to Azure migration activity. I'm just wondering if you can comment on the plethora of customer conversations you've had, whether there are a couple of 2 or 3 specific catalysts that are driving that migration, and how durable a trend do you think that is? Thank you.
Yeah, there are 3 things that are really happening. One is the migrations. A good example would be what I referenced in my remarks with Nestle, with the SAP instances. They moved along with a lot of the data that's associated with it and a bunch of servers. So that's kind of a classic example, I think, whether it's VMware migrations or migrations of SAP, or even just our own server migrations. They're pretty healthy, and as it turns out that we are still not anywhere close to the finish line, if at best maybe in the middle innings of that. The second thing that's also happening is cloud native applications that are scaling. This is even excluding all of the AI stuff, just the classic cloud native e-commerce company, let's say. These are scaling in a big way. And some of those customers were not on Azure previously, but now they're increasingly there because they have come for AI perhaps, but they now stay for more than AI. And so to me, that's another thing you see in overall what's happening across the Azure number. And then, of course, there are the new AI workloads. So those are 3 things that are all, in some sense, building on each other, but that's kind of what's driving our growth.
Got it. Thank you.
Thanks, Carl. Operator, next question, please.
The next question comes from the line of Brent Thill with Jefferies. Please proceed.
Satya, back to the strength across the board in the quarter. Was there anything that jumped out at you or surprised you that you didn't think you were going to see, but you did see in the quarter? The magnitude of upside, I think, had shocked many here.
Yeah, I don't know, Brent, if anything really surprised us, but I think what we are noticing in our own build out of these AI applications and in general is the platform's becoming more than here's a model and here's an API, make some calls, right? I mean, that's in some sense was a bit of the state of the art maybe even a year ago, whereas now you have essentially these very stateful app patterns that are emerging that require quite a bit of rethinking of even the app stack. I mean, take even the storage tier stuff, right? The degree of sophistication you have and, hey, how much of an index do you really want to build by pre-processing so that your prompt engineering or context engineering, as I call it, can be better and higher quality. So I think all of that is emerging. So when I look at a product like Azure Search, Fabric, and Cosmos DB, all of the things, the frameworks around it are just becoming robust to build serious applications. And so that's what I feel great about is the learning curve inside the company, outside the company, the diffusion of the stack, the speed with which that's emerging. That you can build applications is much faster, right? I always go back and say, hey, when a relational database came out, it took a while for people to build an ERP system, let's say. And this thing, we're kind of building pretty sophisticated applications at a very, very fast clip based on, I think, the degree of maturity that's emerging.
Thanks, Brent. Operator, next question, please.
The next question comes from the line of Raimo Lenschow with Barclays. Please proceed.
Perfect. Thank you. Congrats from me as well. I had one question around Copilot, and I'm obviously a happy user here at Barclays. If you think about it, the one thing that we're all realizing is that Copilot is the AI part, but data is becoming more and more important. And then from there on, we can start thinking about agents. What are you seeing in your customer conversations, Satya, about like that understanding that Copilot is actually just the starting point, and then from there on, it's becoming like much broader. Thank you.
Yeah, I think that's right. Even inside of Copilot, I'm sure you're seeing it, right? You now have analysts and researchers to just talk about 2 examples, and of course, people, all the third-party agents. So yeah, there is a lot more of just not request response. It's about spawning essentially applications that then go do work and come back. But the UI still remains very important, right? Even for asynchronous work, to instruct the asynchronous work, you need UI. And to monitor asynchronous work, you need UI. It may be different. It may not be a chat interface. And of course, you need a way to then inspect what the asynchronous work is, right? So even take the example I was giving on GitHub. Even if you're not using GitHub Copilot to create the code check-in or the pull request, interestingly enough, we're seeing massive increase to GitHub Copilot code review agent, even if you used maybe Claude Code or whatever else to write the code. So that's, I think, what's happening across all of these systems. So you're absolutely right that it starts with some kind of a UI that's more chat focused, but it quickly goes beyond it, and you see it in M365, you see it in Dynamics 365, and you see it in GitHub.
Thank you.
Thanks, Raimo. Operator, next question, please.
The next question comes from the line of Kash Rangan with Goldman Sachs. Please proceed.
Hi, thank you very much. Amy, I want to acknowledge that I think a few quarters ago you said that you reach a point in time where you can accelerate Azure while slowing down CAPEX, so you did it. But what is the outlook? When I look at the CAPEX guidance for the upcoming quarter, certainly I would view that as a positive indicator of the book of business you have for your cloud services. But how should we think about the shape of the curve of CAPEX vis-a-vis Azure growth rate in the years ahead, particularly as I listen to Satya's comments on the AI stack consuming more and more infrastructure? Are we at a point where we're going to have to continue to do this and then we magically wait for inference and applications to kick in and therefore create a richer gross margin mix? Thank you so much for your comments and congrats on the quarter.
Thanks, Kash. Let me back up and first say, when you think about the full year comments I've made on CAPEX, as well as the Q1 guidance of over $30 billion, you first have to ground yourself in the fact that we have $368 billion of contracted backlog we need to deliver, not just across Azure, but across the breadth of the Microsoft Cloud. So in terms of feeling good about the ROI and the growth rates and the correlation, I feel very good that the spend that we're making is correlated to basically contracted on the books business that we need to deliver, and we need the teams to execute at their very best to get the capacity in place as quickly and as effectively as they can. And so when you look, and we've talked about the growth rate will decline year over year, but at its core, our investments, particularly in short-lived assets like servers, GPUs, CPUs, networking, storage, is just really correlated to the backlog we see and the curve of demand. And, I talked about it, in January and said I thought we'd be in better supply-demand shape by June. And now I'm saying I hope I'm in better shape by December. And that's not because we slowed CAPEX, even with accelerating the spend and trying to pull leases in and get CPUs and GPUs in the system as quickly as we can, we are still seeing demand improve. And so I am not as focused, Kash, on trying to pick a date at which revenue growth and CAPEX growth will meet and cross. I'm focused on building backlog, building business, and delivering capacity, which we are seeing has a good ROI today in terms of our ability to get that done. So I don't want people to get overly focused on a pivot point, because when you're in sort of these expansive moments, picking a data point usually means you're going to pick to be too conservative in terms of market share gain and in terms of winning. And so I tend to put my energy more there.
Yeah, I think one of the other things, Kash, is that I think I said this in a previous earnings as well, which is the difference between a hoster and a hyperscaler is software and the same is going to be true here. That GPT-4o example I gave is all software, right? The optimization even in the last year. So we know how to use the software skills to take any piece of hardware and make it, multiple X better. And so that's kind of where the yield will come. But as Amy said, while you're really going and building out the plant, you don't want to sort of serialize it. You just want to go in parallel on all of these fronts, and that's sort of what will compound over time.
And I do think it's important when Flex talks about the software layer, he's talking about in his comments to connect this back to the compounding S-curves. And so I would remind people that is something that we saw through the prior cloud transition. It's how we operated through that one. And the same sort of skills and logic done at an even faster pace is what will apply this same transition.
Sounds very encouraging. Thank you so much.
Thanks, Cash. Operator, next question, please.
The next question comes from the line of Michael Turin with Wells Fargo. Please proceed.
Hey, great. Thanks very much for taking the questions, and congrats for me as well on the metrics working in concert here. Amy, maybe on margin, impressive to hear expectations for flat operating margin in the upcoming year as you absorb some of the mix shift towards Azure and some of the more AI-focused offerings. Can you speak in more detail just around your ability to manage those trade-offs and offset some of the mix shift? And I'm wondering specifically just on any productivity gains you're seeing from leveraging AI internally that you'd highlight, or anything else you'd just mention in underpinning the full year expectation there. Thank you.
Thanks, Michael. I think really the area to focus on is when you think about margin. I think sometimes people get a lot of energy around cost control as a driver of margin. The other driver is to focus on making sure you deliver great product that's competitive and innovative and can take share, because that drives revenue. And revenue itself and revenue growth, as you all know better, even perhaps than I do, is a durable way to see margin improvement. It builds on itself. That being said, the second thing I would point to is really what I talked to Cash a little bit about before, Satya and I both mentioned it, is applying all of our skill set here to deliver efficiencies, whether that's at whatever layer of the stack that exists. The S-curves compound, and we are doing that work, and we're focused on it. At the same time, we're doing the build-out. So you'll see improvements there even as we continue to invest. And then, of course, it's about continuing to have great talent here, focus on products and opportunities where we have the biggest markets and the most likelihood of success. And so when we have those three things happen and the energy is right and the focus is there, it gives me confidence in terms of margin delivery. But make no mistake, it starts and ends really with product, which is what we're really focused on here, and delivering that to customers.
That all sounds pretty good. Thanks very much.
Thanks, Michael. That wraps up the Q&A portion of today's earnings call. Thank you for joining us today.
Thank you very much. So, hello, Jose. How are you?
Pretty good, Neil. How about yourself?
Still alive and kicking. Still alive and kicking.
I would hope so. It's only been an hour and a half of some earnings call. Nothing that should put you down. Except it's pretty late by you already, right?
12:30. But I mean, when you see this price action, I mean, you're getting pumped.
It wakes you up. It's that casino air.
It's the Vegas, exactly.
That keeps you up.
Vegas air. So yeah, Meta, $771 right now, which means it's up 11%. Wow. Microsoft currently $557, up 8.5%.
8.5.
Yeah, so crazy numbers here. Nvidia and AMD, I think, are both at $183 right now. AMD actually $184, so better.
Eye roll intensified.
Let's see, Applied Digital, nice, not bad.
Oh, 11.4, nice.
13% right now. I mean, I guess after the comments that were made by Meta and Microsoft, it makes sense that players like that are up. Iron up a little bit, but not by much. Iron up a little bit, but not by much.
My sugar snake, that was nice.
Yeah, apparently we're pumping semi stocks and AI stocks.
Definitely.
Let's see, what else do we have? Hood is down a little bit, but okay, fine. I saw that Amit actually attended the earnings call live there.
Oh, live!
Yeah,
Oh, that's pretty cool.
with his Knicks hat and an Apple Airbud. He's trying to be Dan Ives. I'll send him a message if he dares to go and dress up like a pimp. Qualcomm down, ARM also down, which makes sense. Funny enough, ARM is more expensive than Palantir, and it grows slower than Palantir.
That is pretty interesting. I saw you posted that tweet. We did see some positive action on other data center players. Neil, you had kind of that Amazon up about 2%. Oracle also up about 2% after hours. It's just this overall excitement here. We did have CoreWeave up about 6% after hours. I want to see how that. Nebius up about 4%, 3.7 right now. So there's a lot of excitement here with what we heard from both these players. Pretty much the top Applied Digital up 13% is compute is needed dramatically. There's all these players, if they were able to have more cloud compute, especially Microsoft. I missed a little bit more of Meta, so maybe you can tell me what they said. But Microsoft, pretty much, if they had more compute, they would be growing faster. Yep. And they're going to see in the first half of this fiscal year, because they're starting their first quarter started already for fiscal year of 20. I don't know what year they're in, 2026, 2027. Yeah. That 30 billion they expect in the first half. That's wild of just AI, just because of all the kind of chip spending that they're going to do. And we know that this first half we're getting the Blackwell NVL72 and the Blackwell Ultra as well. So AI compute is still pretty demanding, and anybody within this segment I think is rallying with this. Now the question here, Neo, is are we going to start to get profit takers tomorrow on stuff like this? Or what do you think? What would you be? Obviously, it's good to be green, but anything out there?
Could we see profit taking tomorrow? I mean, it's the day before the August 1st tariff deadline thing, right? So again, maybe a lot of it is already baked in because we know what's going to happen. Seems like nothing can really stop this bull run. And again, these companies go up, right? You've mentioned a couple of companies, but Applied Digital is up 13%, but they reported earnings. They're not up because someone else, like Amazon, is up because the market thinks that tomorrow AWS will also knock it out of the park. Amazon also has other businesses, right? So we'll see. We'll see what happens with that. Could we see profit taking? I mean, is there any reason to take profits from Meta and Microsoft at the moment? Other than you could say that Microsoft is maybe getting a little bit expensive right now, although I don't know by how much. But
and then the question is like, where would the profit takers take money to? It's right.
Google.
Usually, you see profit taking when I would love that, right? Right, yeah. But in theory, you see like a thematic shift, like you move from big tech into some of these other markets. I don't follow those other markets. Healthcare would be a thing. But yeah, so I mean, it's always short-term risk is always possible of volatility. I think with earnings like this, it just solidifies at least the long-term story for AI compute, for data centers, and for is Micron up on this news?
Micron was up today already, 2.4, and now it's only up 0.45%, which again, it doesn't make any sense, right? Because you could say that, they're all going to use SK Hynix, but that's not true either. Yeah. They're not all going to use Samsung either. And so, you're going to need a lot more memory, especially if Zuck wants to have everyone with smart glasses. And
And like you mentioned, it's all types of different memory, right? AI servers, you have your pretty much your RAM sticks like you see in your motherboard. You have all different types of storage solutions as well. So it's also good to remember it's not just the HBM space, and we have big ballers here, 500K chunk on AMD, killing it.
I mean, to
Congratulations.
go back to your previous question, right? When I hear this, and then I go back to my answer that I said, why would you sell? What would you do with the money? But of course, when you're talking about these types of positions, right? Positions that are worth $500,000, maybe $1 million, and now it's like a large chunk of your wealth. Yeah, okay, of course, secure the profits. But selling out of these types of companies, if you don't need to, then what's the point? But securing profits, if it's that big, of course, for sure.
Yeah, definitely. I mean, nothing, like you mentioned, nothing's ever trimming off is never a bad move. Even selling off, but typically I don't even sell off even when things, but trimming is, I mean, we've seen some of our stocks go up dramatically. Again, usually it's when we see some multi-baggers in a short term. We're not seeing that type of movement, but it does seem like the market could be a little bit overextended in the short term where you could see some pullbacks. And now trying to timing the market is definitely not for everybody and definitely not for me. So, and taxes all.
Correct.
We have some people talking about taxes. Obviously, taxes are a pain in the behind. So nothing I would. So there's always pros and cons. Pros and cons, right?
That's a good point. If you're paying taxes, that means you're making money.
That's true. That is true. Yes.
That's the thing. Every time I hear like, oh, but you have to pay taxes, I'm like, yeah, but the reason you pay taxes is because you're making money. Like, you're not losing money. Of course, it sucks to pay taxes, but then again, eventually you will, unless it's in your non-taxable account and you're reaching the age of retirement. Any question you want me to ask your fiscal.ai about the Meta earnings call that I do not have written down?
I would just anything about AI. Just see. Can you give me a quick maybe overview of I don't know. You think about it. Just overview of AI spending or AI market.
And future plans. Because I have already a couple of things written down. So, of course, we know about the development of the AI clusters like Prometheus and Hyperion. Prometheus is expected to come online next year. It's going to be the first gigawatt plus cluster. Hyperion is under construction. As for CAPEX 2025, expected to be between 66 to 72 billion. 30 billion dollars higher than last year at the midpoint. They expected this to be another year of similarity. Significant CAPEX dollar growth is expected in 2026, potentially exceeding $100 billion. The primary focus of this capital allocation is infrastructure and talent. The thing with infrastructure, and like you said before, the thing with all of that is that you can have an insane amount of money, but you cannot build this thing out in a day or in a week. You need the energy, and that's something that's still lacking right now. Which is why I think you can stretch these things out for many, many years. Like, right, players like Vertiv, for example, I think we're going to hear them post quite good numbers for many, many years, because I don't think that all of the build outs, all of the spend, is happening
in one
or even in
quarter.
1 year.
Mhm.
Like, it's not possible. It's not possible.
Yeah. And I want to answer this question really quick, Neil. And I see a custom summary here from fiscal.ai provided. I was actually curious about what was going to be the next Llama. Was it Llama 5? But it seems like they're going here to Llama 4.1 and 4.5. Appreciate that. I'm not even seeing chats here.
But it's fine. I'm seeing your chat.
Oh,
I'm seeing your chat and your super
Thank
chat.
you. Thank you so much there. But it was, am I trimming on NVIDIA? I haven't trimmed NVIDIA, but I kind of look at sometimes, Neil, my portfolio as like exposure to AI. So sometimes if I feel like maybe my whole AI X market has grown, I tend to sell out of maybe some of those smaller multi-AI growers where I feel like in that list, NVIDIA will be one of the bottom ones before I trend. But I look at more AI exposure opposed to just NVIDIA exposure, and I trim from maybe like the ones I have less confidence in. And NVIDIA is definitely down the list there. So they've definitely taken trims from the AI market in general, not from NVIDIA.
CoreWeave, for example.
Yeah. CoreWeave, for example. And Neil, actually, you actually gave me an idea.
Ooh.
You know, I do have a Max 7 ETF, right?
Max.
Right. That's where I do have a nice Max. Seeing all these others go up and not Google go up, and you kind of mentioned, oh, where would you rotate all these big players out of? And you said Google. In theory, me kind of selling that Max 7, some of that Max 7 ETF and putting it into Google, I feel could probably provide me with a better opportunity in the long term of things. So that's something you have me to think about right now, where I might let go of some of that Max 7 ETF and just put it directly into one player that I believe is still undervalued in this whole Max 7 chain.
Or you could keep cash and wait until maybe Nebius comes down a bit, but I don't know if that's going to happen.
If Nebius drops, I'll find cash somewhere else. That one I'll find cash somewhere else for.
Yeah, and for Google, I think I'm seeing here AI overviews. The DOJ antitrust case against Google is expected to conclude with judge's decision on remedies by August 25th. So pretty soon. Pretty soon we can get finally conclusion around this thing, and that might remove the overhang on the stock. Coming back here to what we asked Fiscal.ai for the summary, which is already on there. I think Microsoft is on there right now, or going to be in the next couple of minutes. So they're talking about the CAPEX, they're talking about the Llama models. They were also asked.
First, it's pretty crazy, Neil, how they got the transcript already. I mean, you go to certain websites, they're still they still don't even have the site. The transcript's
up.
up.
Have the transcript, we have the report, we have the slides, and you get your AI overview as well. So pretty neat. We have a link in the description for 15% off. You guys know the drill already. But yeah, Mark talked here about the 5 pillars or opportunities here from business perspective. So it says improve advertising, more engaging experiences, business messaging, Meta AI, and AI devices. AI is already improving ad efficiency, driving a 5% increase in ad conversion on Instagram and 3% on Facebook. Advancements in recommendation systems have led to a 5% increased time spent. So basically doom scrolling, like we said before, the doom scrolling brain rot is increasing on the website. So good things across the board. He was asked a bit about open source, closed source. He was still saying that they're going to do open source, but there are some things that will be not open source because it makes sense. I mean, they're investing billions and billions of dollars. There are things that they want to keep for themselves, and things that will implement probably in the next generation glasses and all of that. So again, all in all, pretty good report.
And tomorrow, Neil, I mean, we're doing live stream tomorrow morning.
Yeah, short
I
one,
believe.
like today.
Yeah, short one. I mean, we could talk about Lam Research tomorrow. That one's up. I kind of did I was looking at it really quick. That one was nice. Quickly before maybe we jump out, are there any sellouts that you're looking into to maybe do some research onto, Neil? Or are you more just really exciting with some of these greens that you want to do a little bit more? Obviously, we heard the Meta and Microsoft, but sometimes we need to give it a second read or a second listen. Which are you going to be focusing on at least for before or after you wake up?
Qualcomm is the interesting one because it's cheap and it keeps getting cheaper. So I want to know what caused the stock to come down 5%. Because I would have, if Qualcomm was at $300 and it comes down, then okay, maybe I can understand because you're expensive and blah blah blah. But it's not. So it's either something that they mentioned in the call, maybe there's a lack in demand in something, but that's going to be interesting. Other than that, right now I'm pretty focused on looking at the green in the portfolio, looking at the green and looking at PayPal Keep and looking at the PayPal Red, because that thing is not normal. It's not normal. Other than that, yeah, that's about it. I mean, tomorrow we'll have Amazon after hours. I think that will keep me busy enough. For those that are interested, SoFi is also up 2% after hours. So we are now up 8% or so since the lows of the day. So chill out.
Nice. I see the awesome, amazing quantum stocks also are up after hours. I heard Microsoft said something
Apparently,
about. Did they say quantum once or twice?
I think Satya said something about quantum is the next. Let's actually ask Fiscal really quick, just to see. What was mentioned about
quantum?
It's a scam. It's a scam.
The next big, that's crazy.
The
That's
next
so quick,
big accelerator in cloud, according to Satya Nadella. So
it was just that one line, huh?
Was that one line? This was presented as an example of Microsoft long-term investment strategy. Progress while thinking with a decade-long arc. So again, decades-long arc. Exactly.
That's what the quantum bulls are forgetting to read, I guess.
No, this is the one. Next big accelerator. So tomorrow, no more CPUs, no more GPUs, by the way.
No more NVIDIAs, no more
nothing.
anything.
But we're not pumping. Apple is leaving Qualcomm in a few years. Yeah, but that's just for the modem. Just for the modem.
And it's something Qualcomm has always mentioned. If you look at this company's past 10K reports, that has always been, I think for at least the past 3 or 4 years, it's always been, we've not projecting this type of growth for this fiscal year,
Plus,
blah, 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 blah.
Apple wanted to leave Qualcomm for many, many years already, and they didn't. Like, it's not as easy as the Intel side. But yeah, all in all, amazing stream. Thank you all for joining. We are, of course, going to do this more and more. Tomorrow, we're back in the morning for a quick market open. And then in the afternoon, we're going to do Amazon call, I guess. But we'll have time to look at Apple and whoever reports, I think Reddit and all of that tomorrow.
Yeah, I mean, Apple should be easy, not doing anything.
Apple we're going to see if they sell any iPhones. But yeah, I think that's going to be fun. Hopefully my chat on here will be working tomorrow. So anyways, thank you all for joining. See you all in a couple of hours.